cheaper, but it's a little bit hard to get past it, and that may just be an earliness thing. But hearing both of these kind of coming of age stories, I think that's where we are right now. This is the time to push, though, especially in the last couple of weeks when the rest of the space seems to be kind of resurrecting itself.
All right, we've been talking about dancing around this topic, but Bitcoin dominance is at like a 4-year high here. When I look at ETFs, that's what obviously what I focus on. If you look globally,
public companies that made up the queues, you know, so many of the cryptocurrencies have no value beyond speculation that it's very, very, you have to be very cautious. So a CoinDesk has to, if we licensed the DAO, the Crypto 20, you need to be the Wall Street Journal. Can't only be a cheerleader. So there's a lot of risk here. So Bitcoin was amazingly well constructed. It's not digital gold because we actually have physically backed tokenized gold, which is gold, and it travels just as smoothly over the blockchain. But Bitcoin's done a better job selling the need, this alternative store of value than gold has done. But I think Bitcoin is dominant. It is here forever, I believe. Some will emerge, but we have to be very, very cautious. I think that's sort of my take for the moment.
Yeah, so I could jump in a little bit here. So the US has launched some futures-based ETFs, right? But Canada's been quite innovative at pioneering the ETF space globally, as well as staking. So we were the first to launch staking in an ETF with our Ethereum product, and recently launched our Solana SOLQ product. That one is attracting both retail and institutional capital because we're solving the complexities of a lot of things. So how do you package the technology, the staking, the security, the right custodians in an easy to access wrapper? This is quite appealing for investors. And the other thing as to why institutions are starting to come in is they also start to understand layer one. So Bitcoin, they understand. Now they're starting to understand layer one, saying, okay, if all these applications in the future of finance need to settle on chain, I don't need to start picking which application is going to win. Like, is it Google or is it Facebook, right? Or is it Microsoft? You just own HTTP. You just own just own the layer one. And so people are starting to allocate through these vehicles because they understand what it is. And at the same time, through these staking mechanisms, they understand that they're participating in the security of the blockchain, which is a plus for them.
So everything that Pascal just said, we couldn't say 5 years ago. Take it back to 2020. And so I'm an early investor in SOLQ, in Pascal's ETF, because it meets all the metrics that you would expect it to meet from an institutional investor standard. So we, I guess we're first money in, scale that for individual and retail investors.
This is great, and I agree, Solana is amazing, and I think the product's amazing, and democratizing staking yield is critical, right? It educates while it pays. Henry Blodgett's point about picking 5 NASDAQ names and holding them for 25 years probably would have had Intel and probably would have not had NVIDIA, right?
Yep.
And understanding layer ones, you would have got it. You might not have had Ripple or Stellar, right?
Yep.
You probably would have had Ethereum and it would have been difficult. So staking's critical, and institutional grade staking is important. Solana probably won't be the Intel. It probably won't be the NVIDIA. It might be the Apple or the Amazon, right? So again, for people who want to make that 10-year bet, you just don't want to pick, right?
The index, 100%.
You want them all in there, and you want some benefit of staking yield. In the meantime, these products, I think, are a gateway. A SOLQ is a gateway to making the whole environment a little bit more friendly, and kind of distributing some of that yield to holders, which will be a great feeling. So,
can I ask John a quick question? John, in the United States, they prohibited staking on the Ethereum ETF. Do you think that the current SEC, the new rubric of the SEC, will change that and reverse it and make it consistent with Canada and other parts of the world, or you think we're stuck with that?
I believe it'll evolve to allowing staking, but that's not like the SEC has given that visibility, but I believe that's going to be the trend. We're coming off of what was such a restrictive SEC. It was completely unreasonable. So, and the ETF really mainstreams these exposures for all investors, whether it's retail or institutional.
Yeah, so I can actually answer that. The SEC's final deadline for the 19 before, which is like basically when they have to say yes or no, you can do these things, for staking is going to be in October. Our view is it's going to be approved. How long after it's approved before all the plumbing is set up properly where the SEC is comfortable? But I do want to give a shout out to the OSC, like new type of ETF out there.
I thought these guys
I don't
were
want to
like
brag.
I thought you were the
It's
socialist country.
It's
and we
not
were
the
capitalists.
OSC, it's 3IQ pushing.
Oh,
okay,
But that's okay.
All right, well, actually, everyone here probably knows about the Grayscale lawsuit with the SEC. I'm assuming maybe people up here in Canada, if you are actually Canadian, you know, but 3IQ, or before that, actually fought a similar battle with the regulators here in Canada. Can you just talk, right now we've gone from super massive headwinds over the last few years. It seems like we have a lot of tailwinds behind us. Can you just talk about what happened with that 3IQ lawsuit and where things are going?
Yeah, so fundamentally, it was working with the regulators to basically, understand what they have the right to regulate and what they don't have the right to regulate. So fundamentally, originally, they came back, in the early days, because it took 3 years, in terms of, where are you going to custody with, how are you going to have your market makers, your banking, all the complexities. And so 3IQ went to go solve all that and brought together a lot of the parties that today make the infrastructure that manage most of the ETFs in the market, right? Once we came to them, then they kind of denied it again, at which point it became infrastructure solved, and so why are you denying it? Because the regulator in Canada is not allowed to dictate which asset class can or can't be invested in if you solve for those problems. And that was the particular lawsuit, was now you're picking and choosing what you're allowed to invest in, and that's not your right as a regulator. And that's how we won, relatively straightforward, because it was basically saying, we solved the infrastructure problem, now you don't have the right to pick and choose. And I think it was a similar case potentially with the SEC, but that was the 3-year journey. Since then, basically they've been quite open at working and listening to asset managers at fitting within existing 81-102 regulations. So what's missing in Canada to really take off compared to some of the other jurisdictions that are building crypto-native regulation is that we don't have crypto-native regulation, so everything we do has to fit within existing laws, and so you really have to, open up your paradigm shifts and educate and think this through in terms of what does it go into to get all these different products approved. So it's a slower process, but it's working, and it's keeping assets safe, secure, and so far simple for investors.
Yeah, this to Jono real quick. I mean, our view here at Bloomberg is like things have kind of switched in the US from what is going to get through, how can it get through, to like where is the SEC going to draw the line? Because pretty much everything is likely to get, they seem to be more libertarian minded. We don't know for sure. But I'm just curious if you could, at WisdomTree, if you kind of think things have shifted enough that way, and also if you can compare and contrast, like you have a lot of products in Europe, obviously, like what's the difference in working with these regulators has been?
So if we do sort of beta, we want to be sort of first to market with beta or near first. When the SEC held our application for Bitcoin for like 5 years, and so that when they did approve us, they approved us with 11 other firms. Not really an ideal environment for actually the asset manager. Funny though, Gensler created just what he didn't want. In the US, there are more Bitcoin ETPs than S&P 500 ETFs. So he created, by allowing 11 firms to say we're first, he created a tremendously competitive and mature foundation for Bitcoin, which I think is just very good for the asset class. I agree, it's more when, not if, and I'm expecting there to be a lot more competition and exposures to come to market.
See, I think one of the things, when you talk about is it an asset class or not, can a bank, a money center bank, a large U.S. institutional bank, custody Bitcoin? Meaning if I own 50 Bitcoin, can I move it to my account at JP Morgan and have them hold it for me? When do you guys think that happens?
I think that's happened. I think Bank of New York has gotten that approval.
So it has happened.
It's just, I mean, if it hasn't happened, it's about to happen, but I believe it has happened.
I think in Bank of New York, maybe I didn't understand it, but I thought in Bank of New York's case, it was like a trial balloon. They were letting them have a trial basis, one bank. I'm talking about the proliferation, Jono, of like all banks. You walk into your bank, you're going to move assets over, you can move your crypto too.
I am...
Is that 5 years from now?
No, I think it's sooner than that. I mean, there was, regulated financial services, you bow to the regulator, you can't go afoul of them. No one is more difficult than the OCC and the banking regulation, and so they were really discouraged the big banks from touching the asset class in any way. And that is falling away. And so crypto should be able to sit side by side with other asset classes and other services, be normalized. And that's where, and I think that journey is happening. ETFs were a part of that journey. These regulation changes are a part of that journey. And I expect that it'll be pervasive. Now, custody is a tough business, and it's a scale business. So, Coinbase has a fight ahead of them.
I think, custody is one thing, derivatives also important, right? If you don't have index derivatives that are liquid, even on the biggest derivative platforms, you have a lot of liquidity in Bitcoin, some in Ethereum, and then it trails off. If banks really start to develop structured products or hold or trade or serve customers, suddenly statutory capital is going to be something you have to manage. And Bitcoin alone, optionality isn't going to solve that. So you need other big containers. QQQ did this really well. Options market for tech stocks exploded. The futures got better. The index options got better. ETF options will handle some of that, but that's a very capital expensive way to manage risk. So we do think that derivatives, custody, and ETFs, you put all those three together with the right kind of scope, that will help distribution, that'll help risk management.
But I don't think there's any argument on the stage that it will, like everything we're talking about is on a journey of happening. The question is, it's slowly then suddenly type of analogy. So is it 18 months, 36 months, who knows? But globally, regulatory clarity is happening. A lot of mid-tier banks are custodying and bringing in crypto-centric clients. Structured products are happening in certain jurisdictions. So fast forward, right, just the mental model shift over the next 3 years. If we looked at the space in 2017, like Anthony was saying, it was non-investable for Skybridge, and now all of a sudden they're one of the leading players in the space. Do that in another 5 years, it's an asset class, guys.
So can I just
go ahead,
say
Anthony.
Just a couple things why we may not actually be bullish enough. Number one, proliferation of capital into the public markets for things related to Bitcoin and other assets. Kraken is going public, would be an example, but other companies are going public. America BTC spinning out of Hut 8 as an example.
Yep.
So there's a lot more capital in the space, which means it's going to eventually flow into things like Bitcoin and a Solana. Number two, copycats that are out there of strategy, formerly known as MicroStrategy. There's a proliferation of those. You have the selling cycle. Jono, how long have you been on Wall Street?
Since 1984.
Okay, all right, so I've been, just like you, I'm 89, so there's a combined 70 years here. We're both lying about our age, don't look us up on Wikipedia. But what I'm getting to is we both know that Wall Street is a selling machine. Yes. And BlackRock is just turned on the dial of thousands of consultants going out there. And so you saw in April, after quote unquote Liberation Day, Bitcoin sort of was not super correlated to the Mag 7 and others. So I'm just wondering, proliferation of capital, copycats, introduction of wider regulation, Wall Street selling machine for these ETFs and other products, we may not be bullish enough.
One thing I will say on that is I work at Bloomberg, and I have a lot of clients who don't take this asset class seriously, which is exactly what we're talking about. And some of them saw what you were talking about that happened in April, that kind of like, I don't want to say the word, but it kind of disconnected from what was happening in the markets, or at least it didn't act the way most people expected. And that prompted a lot of people who were like, maybe I should take this a little more seriously and look into this narrative. You want to say something, Pascal?
I was going to say, so we've seen moments, so like during the banking crisis in 22, Bitcoin completely disconnected to the upside, right? And so we cannot forget the impact that, for example, the cash and carry basis trade is having on Bitcoin right now. These ETFs are being used to run that trade. And when liquidity, basically there's a liquidity crash and you need to get out. So everyone has to get out. And so Bitcoin becomes correlated.
Pascal, explain the trade. Explain the trade.
So basically there's a disconnect, and this happens in every commodity, but essentially in crypto right now, particularly in Bitcoin is very popular, but if you go down the chains, particularly those that have futures, you have a very large spread between the spot asset price and the derivative asset price. And basically, if you wanted to do a market neutral trade, you go long the base currency, so in this case Bitcoin, and you short their futures or you short the perpetuals, and you basically achieve what you call the contango spread in the middle. And for now, that's been close to high. It's beating treasuries almost by double right now. So it's a very popular hedge fund trade. A lot of institutions, some pensions are executing the trade. We're trying to package that trade in an easier way for individuals. And so it's becoming popular. But when there is liquidity crunch, and that is your source of liquidity, Bitcoin's very liquid, people unwind the trade. And so it does, get Bitcoin to get correlated to everything else. But in moments of stress, you've seen Bitcoin succeed at its job at bringing in risk assets.
Yeah, so I'll just add, like if you just look at the spot Bitcoin ETFs, about 15 to 20% of those assets are in hedge funds likely doing this trade. And we saw billions flow out. They went from a peak of $40 billion inflows. $5+ billion came out from February through the end of March. And almost all of that was unwinding the basis trade because you went from double-digit yields on basically risk-free to single-digit yields, and people just took their money out. And then the outflow kind of stopped, and now it's gone back in, but that basis hasn't gone up. So this money that's come in our view, over the last month or so, billions of dollars, we're now at a new all-time high of inflows, isn't because just the basis trade like we saw was happening.
This time here, yes.
Yes.
Yeah.
So I want to talk to someone we kind of were hitting on before. We were talking about headwinds turning into tailwinds. Something I've been worried about since November, and we're starting to get more signs that this might be the case. I want to go to you, Anthony, on this one. Has the pendulum swung too far from a headwind into a tailwind with some of the things that the administration has done with the Trump coin, Melania coin, some of the things happening World Liberty Financial? I think a lot of people want this to be bipartisan. They don't want it to be an issue. They don't want too many things to be happening. And it almost feels like this is giving more ammunition to the people who are anti-crypto solely for political reasons to fight this. I want to hear you just talk about this for a minute.
All right, well, so don't ever forget this with the president, okay? I just want you to imagine you're at Mar-a-Lago and there's a buffet table, okay? And you have to eat everything at the table, okay? You can't take your tray over to the buffet table and say, I want pro-crypto regulation. I want a little bit of banking deregulation. I'd like some lower taxes, okay? And then you walk back to your thing and you drink your Diet Coke with the president. You don't do that. You got to eat everything at the table. You got to eat the meme coin before the inauguration. You got to eat Canada's the 51st state. Sorry about that, Canada. You gotta eat we're gonna take Greenland. We're gonna take Panama. We're going to have tariffs on, tariffs off, Liberation Day, no Liberation Day, I just blinked. You get everything, the $400 million plane, okay? and so you have to understand that you have to eat everything at the table. So to me, if I'm just talking about our industry, he's better for our industry. If we're going to be objective about it, Jono just cataloged briefly some of the things that went on in the last administration. And so, yeah, is there some headwind now? Is there a slowdown for the stable? It's so funny that these things are called stable and genius, so we'll just call them the stable genius legislation. Is there some slowdown related to that because of what Trump is doing with his family? I think that there is. What I would say to Eric and Don, I assume, because I know those guys well, that they're not doing anything wrong. So just be as transparent as possible to reduce the fight, the tension. They're business people. Their dad's the president. They're allowed to be in business. You see what I mean? But I do think that stuff gets passed by the August recess.
Go ahead, Andy. You want to say something?
I couldn't agree more, but when the
What are you eating at the buffet table, though? What do you like most? You like everything, or you just
start with A, go all the way to Z.
All right, you like the plane the best, I think. Yeah, you like the $400 million plane from
I
the
would like
Hamas Qataris.
$400 million
You like that?
plane would be nice. Why stop there? The weekend that the Trump coin went live was an amazing demonstration of liquidity moving, and I think it pointed to. I just love the volume that went through. Nature will take care of things that shouldn't be in the ecosystem, and 10 years from now we'll look back. But that was a build. Like, that was an amazing feat of global coordination of liquidity to have that happen. So
On Solana.
And when did you, who had on their bingo card that the president would put up a website with a Solana address at the bottom? Like, that was pretty cool. So it doesn't matter how it happens, but it did advance a lot of things and it educated a lot of people. So the right and wrong will wash away with time, but it was a groundbreaking thing that was pretty impressive to watch. And for investors who want to stay at the quality end of the curve, Yeah, you got to have some Solana. You don't want to, this week proved you don't want to bet against Ethereum too hard. You may not want to pick which layer ones, but you want that top layer of infrastructure because all that stuff is going to be happening up there. So, you know, Trump is not in CoinDesk 20. It won't be, it can't be, but the results of it, the picks and shovels are in there. And so it was impressive.
So when we looked at advisor surveys and investor surveys, the #1 reasons people gave for not investing yet in crypto was there was no wrapper they liked. Most of them preferred an ETF. We now have the ETF specifically in the US and elsewhere globally. And the other one was regulatory clarity. We got a decent amount of regulatory clarity when the SEC approved the Bitcoin ETFs and Ethereum ETFs. It may not be explicit in some regards, but that was pretty well done, right? But there's still a lot of regulatory clarity that needs to be sorted out. You mentioned the Stable and Genius Acts on stablecoins. Anthony obviously thinks they're going to get done. Wow, we probably need a market structure bill. I guess I'm going to go to you, John. Are institutions that are thinking about entering the space, how much are they relying on some sort of, you know, legal framework coming out of Congress in the US, or are they worried about regulatory clarity in order to get into this space?
I think that you can't generalize. All institutions aren't the same, and there's certainly those that are sort of the early adopters. You are seeing the financial intermediary, now that you have the ETF wrapper, embrace it. If you had asked, 2 years ago or 3 years ago, how many advisors had put their clients into a crypto or Bitcoin, it would be a 0, while their clients had actually bought it on their own. So this, and in the US, money moves through the financial intermediary. That's a big money channel as opposed to direct to retail. I think this isn't so different from ETFs where, it's not a straight line. The regulations take time. The American Stock Exchange was in front of the SEC for 7 years before the SPDR was approved. And then it started with only equity indexes. And then it went to fixed income indexes a couple of years later, self-indexing after that, commodities. So it's a journey, but I think we have that momentum. It is happening. Writing the legislation, though, isn't easy. And some of it may or may not get approved. I'm not as bullish that it will actually get done, but I'm not sure it needs to get done for the asset class to thrive. You just need the SEC not to regulate through enforcement.
See, Pascal, you want to say
so we speak to a lot of advisors, of course, and before the ETFs, it was hard because you had access through SMAs. You just say to your client, go on Coinbase or go on Kraken and just buy and just do what you have to do. So today, the ETFs are available. From that being said, Bitcoin, again, why we're seeing the dominance is the easier one to explain if client demand is there. We're seeing some of the asset managers being a little more innovative and just adding Bitcoin as part of their global macro portfolio. So now everyone gets Bitcoin without having to be sold Bitcoin. And so people are solving for the access problem and the problem of the advisor not having to have career risk by saying, let's go 3% Bitcoin, and then all of a sudden volatility kicks in, and he's got 200 clients calling him like he's trying to golf. He doesn't want that, okay? So basically, the advisors are saying, we're comfortable with Bitcoin, we're comfortable with these macro funds. What we really want is an index and a basket. Because then we can go to our client and say, it's a diversified, professionally managed solution, and we're going to put that in your portfolio, and I could go golfing.
We call them 5%ers, right? The advisors manage in the United States over $100 trillion, and there's trillions in retirement funds, trillions in annuities. You don't want that 5% allocation to be 20% or 50% of your headaches, right? That ultimately we feel will have a Bitcoin chunk and we'll have an index chunk. We hope CoinDesk 20 will be that index chunk. And then that's what you hold for 10 years or 20 years or 30 years. And by then I think that's a pretty solid bet.
Anthony, you had something you wanted to say?
Well, just briefly, I think Jonathan's ultimately right about legislation. It's very cumbersome, as a huge sausage factory. But I just want to remind people that Fair Shake, the crypto pack, came in 24, dumped $250 million in. Other crypto aspirants gave the president something like $150 million to help him win that election. And I find it very hard to believe that the Democrats are not going to be at least crypto neutral by the time we get to the 26 election season. So that's the reason why I'm optimistic. But I do Jonathan and I have a lot of experience with this stuff, and we can go haywire when you're in the Congress, but I think the incentives are there to get these bills passed.
Yeah, I mean, if you're not optimistic on this asset class and more broadly after this panel, you probably weren't listening too well, but that's all we have time for. Thank you, everyone, for coming early.
Great job. Thank you.
We're always good to see you. I'm going to see you this summer, I hope.
Hopefully. I'll tell you.
Welcome back. We're coming to you live from the CoinDesk studio at Consensus 2025 in Toronto. I'm Christine Lee, joined by my colleague, Ben Schiller.
Good to be here. Thank you, Christine.
All right, so we're kicking off things. We heard from our Consensus chair, Michael Lau. We also heard from a panel about Bitcoin as an asset class, Anthony Scaramucci, Andy Bear, ETFs, et cetera, et cetera. You've had a key role in programming the sessions at Consensus, so give me a sense of what you're looking forward to. What are the highlights?
Yeah, so that session we were just watching with Anthony Scaramucci and the founder of Wisdom Tree and others was really talking about this idea of Bitcoin as an asset class and really coming of age in this cycle since the election. And we're talking about some of the politics around crypto regulation and then the impact of the US on other jurisdictions around the world. So that's one of the themes of this conference is that, you know, post the American election, we're going to see other places like Canada be more front and center with crypto adoption in the capital markets.
I found it interesting when Anthony Scaramucci was talking about, you know, when people think of Bitcoin as an asset class, I mean, everyone here already thinks of it as an asset class. It has to hit around $20 trillion.
Yeah.
It's at $3 trillion now. And then we have a whole slew of altcoins. Bitcoin dominance is at a 4-year high.
Yep.
And so where are we in the cycle now? I mean, it's getting more mature for sure.
Well, it's interesting for anyone who's tracked crypto for a long time because a lot of people have obviously predicted that Bitcoin would become less and less important over time as more and more altcoins, different digital asset products came on the market. But actually the opposite has happened. There's been this flight to quality, which is Bitcoin. And Bitcoin is as dominant now in the crypto market as it has been for 10 years or 8-9 years. So 65, 70% still. So it's just been interesting in this kind of moment when some of the other assets are going down. Bitcoin has very much been the asset in the crypto market. And to a lot of people on Wall Street and other financial centers of the world, Bitcoin really is crypto. There is no crypto, it's just Bitcoin, which is obviously music to the ears of Bitcoiners around the world who've often said that, you know, Bitcoin is crypto and crypto isn't a thing really. So
it's interesting, you know, you can really tell, well, now, I mean, Bitcoin is the OG, but you can also tell when people got into digital assets, if, you know, they're hardcore Bitcoiners. Then there was cryptocurrencies with Ethereum, the ICO boom, and then we started calling it, Bitcoin, or blockchain, not Bitcoin, but nowadays, definitely Bitcoin, not blockchain. And then it started being called Web3. So, but at least at Consensus, we embraced it all. We're just here for the digital asset revolution.
Well, that's true. I mean, we're sort of fairly agnostic about different chains, and that's one of the ideas of Consensus is to really bring all
Yeah, I think so to a point. That being said, I feel like every day we see different types of threats pop up. In that even in Toronto, we've had various CEOs of crypto exchanges get kidnapped. I think earlier this week we saw someone in France, CEO of a large company over there, have their family attacked. There does remain an increasing concern around security, which is like terrifying in a different sense, right? So I think I see both sides, truly. And I don't think we've ruled out any possibilities for ourselves in the future. On one hand, I imagine that we could see a bunch of pushback if people are like, oh no, they sold out, they're finally doxed and in the public. But at the same time, I think lots of people have met us at conferences. Lots of people have seen us wandering around at events. Thankfully, I do not walk around with a bear mask on all the time. That might be, both impractical and a bit defeating for the purpose.
And maybe hot as well.
Yeah.
You know what? It's not too bad over here. It's an outdoor panel in Singapore that really gets you.
I hear you on the concerns with the kidnapping. I mean, we do have people attending this conference who have been kidnapped for their Bitcoin and crypto and whatnot. But we also want to talk about Berachain. So, I mean, for a 10-year-old, explain to us what proof liquidity is, and why we need another layer 1 blockchain in this very crowded and competitive ecosystem right now.
A great question, a very fair one. I think that if we're trying to do like the ELI 5 version, if you will, the best way to think about it is a little bit like the App Store in a sense. And I think that many chains can use this analogy, but the real value here, the real differential, if you will, between a base app store, if you will, and a Berachain app store, is that the app store itself is actually helping to power and give incentives and rewards to its applications. As we see it, or if you look at a typical proof-of-stake chain, like Ethereum, Avalanche, Solana, whatever that might be, they have a carrying cost, right? The chain or the application, whatever you want to, the base layer or the operating system, if you will, has a cost to live. It has to give out emissions to validators, these nodes that secure the network. And normally they're paying for security, which is great. But at the same time, one has to note that security doesn't really do the job of growing an ecosystem by itself. So if you really want the App Store to flourish, and if you want to have lots of applications that people want to use, one could argue that the best use of those emissions or those costs or those rewards that have to go out should actually be towards the apps themselves. So if one is to look at Berachain in a nutshell, the thesis is that the carrying cost of the chain or its emissions should go towards supporting applications and users of those applications, as opposed to people who are simply statically holding a native token or sitting idle, if you will. So in the classic blockchain context, it's taking inflation and it's pointing it into the app layer as opposed to out to the validator layer. And in that operating system context, it's like saying, by using Windows or Microsoft Office, you're actually getting rewarded for using Word and Excel and PowerPoint along the way.
Mm-hmm. Okay.
And why do we need another L1 blockchain, which is a very reasonable corollary there, is because right now there actually are 0 blockchains that exist in this manner, right? Where they're actually, I'd say, mechanistically designed to drive value to their application layer. On the other hand, that is really Berachain's core purpose. It sits and it exists to effectively reduce the customer acquisition cost and accelerate, positive user behavior loops within the application layer itself. And if we were to believe that, a future of chains is dictated by breakout apps and things that one can actually do on-chain that you cannot quite as easily do off-chain or in the real world, if you will, then we almost think about this in a venture portfolio or Y Combinator-esque approach, right? If you say there's going to be 100+ applications building on this chain, Berachain's role here and Berachain's ability is to actually help accelerate each of these and give them a better shot on net by reducing their customer acquisition costs or user acquisition cost, increasing LTV. Then you hope for 3 or 4 unicorns out of that batch, and that can spawn the next Uniswap, the next pump fund, the next virtuals, the next whatever you want to call it, that has been a breakout in crypto. And that's sort of the thesis at a very high level.
Do I have Ethereum was born in Toronto, in Canada. Do I have it right that Berachain was also a Canadian-made project? And
Yep.
What would you want to say to policymakers to help this industry thrive?
Yeah, 100%. I mean, I think we've actually seen reasonably meaningful steps in the right direction from policymakers recently. Like even the OSC has recently been, I think, looking much more favorable.
But this is a Canadian project, yeah.
Yes, it is. So Berachain is, like I'm born and raised in Toronto. My co-founders are born and raised in Toronto. We all went to school at Waterloo at different points in time. So I think that there's a lot of Canadian blood over here. And a lot of the team is folks who are ex-Waterloo, ex-U of T. And we have our offices in downtown Toronto as well, along with satellite ones in Milan and Bangalore and so on and so forth. But we're very much proudly Canadian, and I think that the biggest thing I'd be thinking about for policymakers is how you actually encourage Canadian companies to not experience the same brain drain in crypto that they're seeing in everything else, right? As in, I think it's still very common, especially from our old classmates at Waterloo, to head off to the Valley or to New York or wherever they might want to go in the U.S. at this stage of life. Crypto has always been a little bit less problematic, in my opinion, in Canada than the U.S., and I think there is, an advantage to really pressing that. Yeah, and then I think it'll also be interesting to see if we see the breakout of Canadian stablecoins. I know that we've seen, initiatives from Wealthsimple, et cetera, type players around CAD-C and whatnot, and I think that could also be quite healthy as that market explodes.
All right, Smokey, that's unfortunately all the time we have for you right now, but I would love to speak with you further later on. Okay, that was Barra Chain co-founder Smokey Barra. Up next, Ripple has entered the stablecoin race. More after the break.
Crypto? Never miss a market move with our new mobile app. The crypto world moves fast, and staying ahead means having the right information at the right time. Track the tokens that matter most to you. Add them to your watch list and get instant notifications on price movements and all-time highs. CoinDesk award-winning journalism now in your pocket. Be the first to know about breaking stories, regulatory updates, and market trends. Tune into the latest CoinDesk podcasts and videos to gain insights and stay updated on the ever-evolving market. Cut through the noise. Curate your newsfeed and alerts around your interest. Get the insights you need without the distractions you don't. Download the CoinDesk mobile app today.
Welcome back to CoinDesk live from Consensus 2025. I'm Jen Sanasi with Christine Lee. Our next guest is a longtime fintech executive who's calling 2025 the year of the stablecoin, and he's leading that charge at Ripple. Jack McDonald, Ripple's Senior Vice President of Stablecoins, join us now. Jack, welcome to the show.
Thanks for having me.
Well, I got to start here, Jack. We have stablecoin legislation that we thought we were going to get in the United States. Now it's looking a little bit rocky. You called it the year of the stablecoin. Is it still going to be the year of the stablecoin?
Yeah, stablecoins are having a moment. It's a bit of a thing. I think politics are playing out, but the conversations we've been having, we have a full policy team in Washington, D.C. that keep their ear to the ground, and it certainly feels like stablecoin legislation is coming. Still working through some nuances, but my sense is it's going to come, and it's going to come sooner rather than later, which will be a huge unlock for the industry.
Is it becoming a bipartisan issue? So we're seeing the Democrats reportedly delay stablecoin legislation, concerned about ties with crypto and President Donald Trump, that he is unjustly enriching himself using his public office for personal enrichment. But is it becoming a partisan issue now?
Well, a lot of politics become partisan, and I'm not, here to talk about the nuances of the bills as much as I think there's a general direction of travel that both sides of the aisle want to have a more meaningful environment, a more constructive environment in the U.S. for digital assets. And stablecoins, I think, represent really the lowest common denominator. It's really the least crypto that you can have, and so it's something particularly for newcomers to the space to really wrap their heads around. Because of how they work, and certainly and the whole premise of this legislation is to provide regulation and clarity around stablecoins, and so being dollar-backed, being regulated, I think is something that both sides of the aisle are getting behind.
I mean, there was talk on the Republican side that they were hoping to have stablecoin legislation by this summer. Trump has said that. Do you see that happening?
I'm optimistic, but I'm a half-full kind of person.
I was going to say, you're one of the only optimistic people I've heard from on that topic.
There's been talk that it's going to be part of a market structure bill. There's been talk that it's going to be on a standalone basis. My sense is that there's a lot of motivation and momentum behind it, and I don't want to throw a date out there, but my sense is we're going to have stablecoin legislation here fairly soon.
We talked to a lot of stablecoin issuers at CoinDesk, a lot of platforms that offer stablecoins. For you, what is that killer use case for stablecoins? Does it have to do with remittances? Does it have to do with real-world assets? Does it have to do with providing infrastructure to the traditional financial institutions and rails? What's that killer use case for you?
Am I only allowed one answer?
Yes.
Can I have two?
Okay, you can have two.
So clearly global payments, cross-border payments is right at the crux. I think most people believe that stablecoins are the killer app for cross-border payments. Ripple's had a front row seat in that business since our inception, and certainly a part of the origin story. And payments are a broad range: remittances, treasury movements, charitable donations, payroll, paying of consultants and whatnot. We're really, really excited about capital markets as well. The recently announced acquisition of Hidden Road is a quantum leap forward, I think, in terms of our ability to lead the charge of bridging the divide between traditional finance and crypto Web3. Stablecoin is right at the crux of that. We'll be able to use a stablecoin as a piece of collateral to cross-margin assets between those two different industries. And so I think the next couple of years are really going to play out in meaningful ways about how capital markets are really reinvented by using stablecoins there. So I'm really excited about that part.
Okay. Well, I mean, Tether is the largest issuer by market cap. And how do you see RLUSD competing and trying to grab a share with that? And do you see that dominance by Tether coming down below 50% in the coming years?
Well, you know, in many ways, hats off to Tether for starting this industry, right? I mean, they've created a meaningful business, Circle to follow them. The two of them dominate the space today. We're not entering the space because we think it's not going to grow and it's strictly going to be a market share gain. We think the space is going to grow meaningfully. So you talk about the addressable market, and whether it 5X's or 10X's, you know, from here over the next couple of years, we're going to be a leader in that space, and we're going to take our fair share. I think different stablecoins have different use cases that they're targeting. They also have different business models that they're using to approach. Our focus is on serving institutions. We want to do it in a regulatory compliant way, which is what all the Ripple businesses have done. It's always an enterprise focus. It's got regulatory compliance at the forefront. And so we're approaching the market going forward a little bit differently than some of our competitors. And we think there's meaningful upside for us. We're quite excited. The launch of RLUSD is ahead of plans. We've got some great partners coming on. And so we're excited about the future. We're excited about what we're going to do with Hidden Road.
All right, and before we let you go, what are you excited about for Consensus? This is our first day. It's the morning. A lot of events still to come. What are you looking forward to?
Well, it's just a great atmosphere here. Obviously, there's some positivity in the air with all the regulatory changes. The price of Bitcoin, I was just talking to your next guest about Bitcoin over 100, has this mood-enhancing element to it overall. So I like the vibe here. I like the builders building, and it seems like the traditional institutions are also leaning in. So we've got a good mix of people here, and I'm excited about the next couple of days and appreciate everything that the hosts have done to have us here.
I know you said that. I know that we said you have to go, but I want to talk about Bitcoin over 100,000 for just a second. We have a prediction market on Myriad Markets at Consensus 2025. People are putting bets against if Bitcoin will hit $110,000 while we're here. Maybe you're not allowed to make a price prediction, but what do you think? You think we could get there?
I'm not allowed to make a price prediction. Okay. I think XRP will outperform. How's that?
Yeah. Here's another one. Okay, we heard also earlier that for crypto, for Bitcoin to be considered a asset class that institutions really understand, it has to be 20 trillion. For the stablecoin market, where do you see that market cap hitting in the next 5 years?
Very interesting question. I don't think about it from a market cap perspective. I think stablecoins are taken very seriously today, which is part of your question. And I think regulators, and there are conversations going on right now around the world with different regulators. If stablecoins can be treated as good collateral, if it can be used as regulatory capital with the regulators, for example, that is a huge unlock from a capital market standpoint. And the logic behind having a stablecoin treated as good collateral or reg capital is because the underlying assets for some issuers like us have treasuries, cash, and government money market funds, and those assets are treated as good collateral. So if those assets are, and you just simply have a digital representation held in a bankruptcy remote account, held by a fiduciary, there's really no reason why they shouldn't be. And if you can pledge a stablecoin as collateral, the sky's the limit in terms of where this market can go.
Jack, thanks so much
for
joining the show. Enjoy the rest of the conference. All right, that was Ripple's Senior Vice President of Stablecoins, Jack McDonald. We're going to take a quick break. We'll be right back. Thank you. Yeah. U.S. President Donald Trump's second term in office has been a roller coaster ride for the markets, driving Bitcoin to an all-time high of $109,000 and plunging U.S. stocks to historic lows. Joining us now to discuss is Anthony Scaramucci, founder of Skybridge Capital. Anthony, welcome to the show.
Good to be here. Thank you, guys.
We were just talking about that massage you got this morning.
My back is my back better? I don't know. Does it look good from the angle? I don't know. I'm working on my posture, ladies.
Sitting up straight. I like it. Yeah.
Yeah, when you're vertically challenged like me, every little bit of posture helps.
You got to get ready for the crypto ring.
Yeah. By the way, that's a great idea. You're getting massage. If you speak at a CoinDesk event, you get a massage.
You gotta see it to believe it, folks.
Trying to market for you people.
All right, Anthony, you famously lasted 11 days as the White House communications director. You've seen firsthand Trump in the office. You've campaigned with him. What has changed from his first term to his second term in terms of how he's approached the presidency?
I think the central thing that has changed is that he is more confident in himself with that job. I think and I think this would be true for anybody that's had the job, it's a job that George Bush, Bill Clinton, they would all say for you that no job can prepare you for the job of the U.S. presidency. So Donald Trump joins Grover Cleveland as the only president to lose an election and then regain the presidency. So those are the only two figures in American history that actually had experience at doing the job. And so he's way more comfortable in the job. And he made a decision, rightly or wrongly, to clean out all establishment Republicans from the Republican Party. So people on staff with current of nefarious activity that's going to slow things down for people. That's just the facts.
We were just talking to Jack about stablecoin legislation. Stablecoin legislation was really a bipartisan issue, now becoming something that's looking a little bit more partisan. Democrats are saying, they question President Trump's involvement in crypto projects and stablecoins. Curious to hear your thoughts there.
Well, I think it's still going to get done. I'll make a prediction on your air that legislation gets passed before the August recess.
Oh, wow.
That's a bold prediction.
Yeah, it's aggressive, but I think it's necessary for everybody, because if you step back, I don't think the Democrats want to deal with Fair Shake, the Political Action Committee that ousted lots of Democrats in 2024. And I don't think the Democrats have found an anti-crypto voter. There are pro-crypto and in some cases single-issue crypto voters, but there's very few anti-crypto voters. So I don't think the Democrats want to be on the wrong side of the stablecoin bill. Are they protesting right now because some of the things that President Trump is doing? I don't like it. I can understand why they don't like it. 2 or 3 days before you're getting re-inaugurated to the presidency, you're launching a meme coin. Let's just go over this quickly.
Yeah.
58 wallets, 10 million apiece. They make over $500 million. 794,000 people lose $1.1 billion on the coin. It's not right, guys. Okay, and so they can justify it any way they want. But
last night, the New York Times
on.
released that article showing a company with ties to China has said that they are going to invest $300 million into Bitcoin and Trump's meme coin. And so this is raising questions about buying influence to the presidency and public office. Your thoughts?
Well, listen, if you buy enough Trump meme coin, you can have dinner with the president and get a tour of the White House. So to me, it's too conjoined. I think you're over the line of what is right. Remember, there's the spirit of the law, and then there's the letter of the law. Even if he's inside the letter of the law, he's outside of what the spirit of the law is, and I think it hurts the country. I think it makes us look bad. So he can defend it any way he wants. It's not right. By the way, don't go by me. Ask Laura Loomer and ask people like Ben Shapiro. They're Trump supporters. I'm no longer a Trump supporter. They are dead set against some of the stuff that he's doing, which is in a direct violation of the emoluments clause in the U.S. Constitution.
Is this grounds for impeachment?
Grounds for impeachment? I'm not sure. I hope the country doesn't go down that road again. The only way if Donald Trump is going to get impeached, it would have to be something even more egregious than what we're talking about right now. But you would have to get the Republicans on side with the Democrats. I don't think impeaching him again and having a partisan vote in the House and then a partisan vote in the Senate is the answer to America's dysfunctionality. I wouldn't recommend it.
I want to turn now to Skybridge Capital. Have you adjusted any of your investment strategies based on Trump's more crypto-friendly policies?
No, not really. We sort of same as we've always been. I was on this desk in Davos 3 years ago. We're getting demolished because, we were tied to Sam Bankman-Fried and Bitcoin was at 16,000. Bitcoin, I think, is what, ladies? Where is it now? 103?
Over 100,000 for sure.
So, listen, we stayed long every one of those positions, and so we're 5-1 from that bottom. I'm not allowed to talk about our performance, but I'll just say this. We've got 35% of our business is tied to digital assets, and so if you just take a look at what digital assets have done over the last 2 years, we've done very well. And but listen, I've been humbled by markets and I've been humbled by life. So I'm not here bragging. I'm just saying we're doing well right now.
Buy the
We
ticket,
haven't
take
changed
the ride.
anything.
It's going to be
Right,
going to be
exactly.
a roller coaster.
Exactly.
You've got the
Exactly.
gumption
I don't
to
even know if I
handle it,
reached
so.
the height requirement for the roller coaster that my life has been, but I'm doing the best I can.
I also want to ask you about the tariffs because that has been a roller coaster ride for the crypto markets, for the stock markets. What do you make of the game that is going down?
It's misguided policy. President Trump's wanted to do that for 40 years. He's got a group of willing sycophants that are willing to implement the policy alongside of him. It doesn't work. The market and the bond market, equity market, bond market, told you that those policies don't work. And so he had to walk back those policies. And so they're even the tariffs right now.
But was
are
that
even
his plan
too
all
high.
along?
I'm sorry?
Was that his plan all along?
No,
Introduce
come on,
these
that was it.
incredibly
He's playing
high tariffs.
He's
and then-
playing
Anthony, most people who sit at this desk say that was his plan all along.
That was his plan all along. Okay, he's playing 19G chess, okay? He's not, okay? He's sitting in the corner eating the chess pieces. He's not playing 19G chess, okay? And so, the plan is not the right plan for America, and it's not the right plan for the integrated global economy. If you want to make the trading system fairer, there were a lot of different ways to go about it that would have been better for the country.
All right,
You didn't need this level of volatility and chaos.
I guess that's true. I have a mental image now of those chess pieces being eaten in the corner.
They look like McDonald's French fries, but they're like shaped in chess pieces, just to give you the full visual.
Just before we let you go, Anthony, I know you have to go in just a minute, but you keep coming back to Consensus. You keep sitting at this desk with us. What is it that keeps bringing you back to Consensus?
You guys. Look, listen, I'm a long-time crypto investor now. This is my 6th year in the business. I bought my first Bitcoin in October of 2020. We own a lot of Solana. We own a lot of Avalanche. And some other assets, Casper, et cetera. And so hopefully you'll continue to invite. Tell you what, if you continue to invite me back, I'll keep coming back.
Fair. I think that's a deal. And we'll have a massage chair for you ready.
Thank you. Yeah, that was great. Big shout out to the massage team here at Consensus.
Anthony, thanks very much.
Good to be on with you guys.
Always a pleasure.
That was founder Anthony Scaramucci. Welcome back to CoinDesk Live from Consensus 2025, brought to you by MoonPay, the global leader in crypto payments. MoonPay recently made 2 historic 9-figure acquisitions in Iron and Helio. Building on its vision for the future of payments, I'm Jen Sanasi, here with my co-host for about the next hour, Andy Bear. Andy.
Hey, Jen, we're at Consensus.
We are at Consensus. Andy and I do this thing where we just travel around the world and talk to each other. It's my favorite thing to do.
But we're in your backyard now.
We are in my backyard. I am a Toronto native, and so I love that we've brought Consensus here to Toronto, here to Canada. Talk to me a little bit about you coming here. I know you were telling me you used to travel to Canada a lot when you worked in traditional finance. Talk to me about the significance of Consensus being here.
I think it's always been a big scene for the pension community. The Canadian pensions have always done advanced strategies using a lot of derivatives and a lot of global allocations. So it always made sense to come up here. And you know, it's easier to get here from New York than Boston, you know, and you just fly, you know, hop on a Porter's flight, land in Billy Bishop, and you're right there. So it was wise to have Consensus here in springtime, maybe not in February. That would have been a different experience.
That would have been a completely different experience.
Hong Kong in February, and then, you know, nice place in the spring. So always a delight to be here.
I don't think we would have had 15,000 attendees in February in Toronto, and so I'm happy that it's happening here in May.
Yes, that's right.
Yeah.
So, and looking forward, I guess we've announced, so next year we've set some dates out. We'll get those later for Hong Kong in 2026 and then down in Miami. So
yeah, next year we're going to be in Hong Kong, we're going to be in Miami, no cold weather for us, but we're going to keep I guess the maturity and seriousness of Consensus going, Andy. Every time I meet you at Consensus, it feels more serious, it feels more mature. Talk to me about the types of conversations you've been having at the events of the last few days.
A lot of it has been about, I guess, moving crypto from this trading asset class to an investment asset class. To us, as an index company, that means putting portfolios together that people can hang on to for 10 years and not have to worry about picking individual names. So we just did a panel with Anthony, who was just on, and with Jono from Wisdom Tree, who's going to be on with us in a few minutes, and with Pascal from 3IQ about, you know, what would you buy now that you could put in a drawer for 10 years, confident that you're going to end up with cycle survivors on the other end. So we like CoinDesk 20 doing that, and we feel a lot of progress in that direction, certainly since we were in Austin last year.
What did they say? What was their answer?
I think that they've all commented that in the last couple of years, there hasn't been as much acceleration of progress as there has been in the last couple of months. We're catching up with Europe, which is sometimes an unusual feeling when it comes to technology and adoption, especially for investments. So we are catching up. A lot of legislation ahead. We have the stablecoin bills that we're trying to muscle through. Then we have more structural legislation around crypto, more ETF approvals, in-kind subscriptions and redemptions, laws around permitting staking for proof-of-stake tokens, which Canada has, again, done before the United States. So there's a lot of near-term stuff. I think long-term, we want, I think maybe it was Anthony who said, Wall Street's just a big distribution machine, and they need simple, understandable things to distribute, and I think ultimately that's where we want to get.
That's interesting. I know last year in Hong Kong, there was a little bit of an event for institutional players that happened before the conference. That happened this year?
It did, and you know, the funny thing about Asia over the last couple of years, a lot of it was about RWA, which to old-timers means risk-weighted assets. Why are you talking about risk-weighted assets? Of course, in this generation, it means real-world assets. Tokenization has now landed here, right? And you have great products by Wisdom Tree and by Fidelity and Franklin Templeton, and they're getting used, right? They're being used to enhance collateral. They're being used to keep sideline money still earning. So those are super exciting. Of course, stablecoins now up to about $250 billion in TVL. That's super exciting too. Millions of use cases there. All of these things need to sit on blockchains. So people, you know, Ethereum is up, what, 35, 40% in the last week since the Petra upgrade. So Ethereum's not going anywhere. Solana's remains strong and has a lot of new products. So it's a really exciting time up near the top of the quality curve. Once you get down into the other stuff, then, you know, buyer beware.
Yeah, we don't need to get down there. You know, both of our last two guests, Anthony and Jack, said that they think that we will get stablecoin legislation before summer recess. Curious to hear your thoughts there, Andy. And the reason I'm asking you is because most people after this last vote are saying kind of iffy now as to whether that will happen.
We would love to not care. We would love to be able to be patient. But I think that the idea that we need legislative momentum, right? Last year we had a lot of Bitcoin adoption momentum.
Yep.
We need to have legislative momentum here, get the naysayers out of the way, get stuff done now to provide a platform on which more legislation can be passed. In the meantime, when it comes to the kind of stuff we're doing, we hope to be as legislation neutral as possible and just get better products in the hands of distributors that make sense, easy to understand, that can get them out into investors' hands.
All right, Andy, you and I are going to be talking all about markets, so it only makes sense to take a look at what the markets are doing. Let's take a look at the price of Bitcoin before we get into our interviews. $103,412 right now. Andy, I don't know if you know, but we have a prediction market going on in Myriad Markets. Will Bitcoin hit $110,000 during consensus? What I know you're not a betting guy, but what do you think? I mean, we're looking pretty good.
Bitcoin shape-shifted from a tariff tantrum mooring, which it did a great job, to an all-time high seeker in the last 2 weeks. So never bet against Bitcoin upside. That's what I got to say.
Never bet against Bitcoin. All right, before we get to our next guest, let's take a look at the price of Ether quickly. 2,588 right now.
Sitting at 1,600 for so long. What's going on with Ether? The thing that had no steering wheel, no rudder, all of a sudden back in the game after the Petra upgrade last week, although it's hard to see if that was really the catalyst. And now we're back. But look, again, $250 billion in stablecoins.
Yep.
A lot of tokenized stuff. All of that has to sit on blockchains. Ethereum is the kind of the gold standard for security. So even if things are settled, even if they're not executed on Ethereum, that still counts. So
all right.
Still matters.
We'll keep an eye on those prices. Our next guest has been leading PayPal's move into digital assets, including the launch of the PYUSD stablecoin. PayPal's Senior Vice President of Digital Currencies, Jose Fernandez de Pont, joins us now. Hello again.
Hello, good to see you. Good to be here.
Yeah, good to have you here. It's been a real stablecoin theme this morning, I have to say, and I've asked everyone, including Andy, about that stablecoin legislation. And so I want to hear from you. Do you think we're going to get stablecoin legislation before August recess in the United States?
Save my job for me, please. How are you guys thinking about
that regulation
about tokenization beyond treasuries?
Well, we've done equities.
You know what I love about PYUSD is the experience of acquiring it, right? Because we're already in PayPal, people are used to it, and suddenly there's this new kind of module, right? And I think it gives people reason to just spend more time in the space.
So we're launching
and to investigate
in
it more, make
July
it more
our
of a
global
home
markets
base.
platform.
How do you think about the user experience there
really
and making it a place where people want to hang out?
We have sleepless nights about user experience. We care so much about it. What we are trying to do in the end, we're trying to do three things. We are very aware that we have a very large market. So for us, it's all about how do we get the digital asset space closer to the mainstream.
Right. Include some wisdom tree funds.
So we're trying to get, first to make PayPal and Venmo the best mainstream. It's never going to be a crypto-specific wallet. It's never going to have
an SPV and it's a secured
50 tokens
tracker certificate.
But we want
to be that gateway product that gets people into crypto. So we started supporting 4 tokens. We added Sol and Link recently. We will continue to add things that with that experience in mind. And then we're trying to get, for stablecoins to thrive, we need that to be not only available in institutional markets and in capital markets, we need to have hundreds of millions of people carrying a stablecoin in their wallets. And that's what we're trying to do. Not only, and everything is part of that user experience. We recently announced that we're going to have be providing rewards for people holding stablecoin in PayPal and Venmo. That's also part of the user experience, is giving people a reason to hold and to use it and to pay with it.
I think that's critical, right? Because I have a PayPal balance just generally, right? Because you kind of just do, you want it around. Getting rewards on it is important. If I'm actually going to send money in and have that expressed in PYUSD, having rewards is critical. You don't want people to buy PyUSD and then exit the platform and not be there anymore, right? You want them to stick around. Hey, while I'm here, I might as well buy some Solana and sit on that for a while.
And the way that you get people to use it is counterintuitive. But to have PUSD stay in the system and circulate, you need to make it really, really easy for people to get it out. Because if people are concerned that they're going to be frozen into the crypto asset class, they will not be using it. They say, hey, the moment that you want to take it out and go back to your bank account, you can do it. And being that conduit between fiat and crypto is super, super important for us. The analogy that we keep using is SMS, right? You were talking about your PayPal balance. The way we think about PUSD is tokenized PayPal balance. And the advantage is that you can send it to people who don't have a PayPal balance. I'm old enough to remember when you could only do SMS with your people who were in your own carrier. And we look back at that and say, that was insane. That was a Stone Age. Same thing. You should be able to send value, stable coins, ours and others, to people who are using a different wallet.
Right. Fantastic.
Beyond stablecoins, what's PayPal
On the digital asset space, we get two questions from people. They want us to support more tokens. We get two requests. Is, hey, make our money work harder for us. Rewards is going to be a part of that, but also we're doing a lot of stuff in the traditional payments space. And then we want more tokens. We like the experience. We understand that you're not going to be the long tail of crypto, but we are covering now assets that represent probably a little bit south of 80% of crypto market cap. We will continue to go there. And more, what you're going to see is the place where I think we can help the most, which is getting more crypto, more stable coins into core payment use cases. You can use it today to buy crypto. You can use it today to buy a checkout. You can use it on the remittances business. And we have already announced that we're going to be doing that for bill pay. So merchants can hold a stable coin and they will be able to pay their bills with the PayPal bill payment platform that. So we believe that the uniqueness of our stable coin is actually the merchant and consumer platform, and we really want to drive payment use cases there. We want the stablecoin to be available in crypto markets. That's where a lot of the volume is, and volume drives liquidity. That's why our recent partnership with Coinbase is so important. And I do think that institutional investors want more options. They want that ability to do more than one or two stablecoins.
Jose, it was such a pleasure speaking to you here at the desk. We have to wrap now, but we look forward to seeing you around the conference.
Thank you so much. Thank you for having me.
Thank you.
That was PayPal Senior Vice President of Digital Currencies, Jose Fernandez de Pont. We're continuing the conversation at the crossroads of TradFi and DeFi. Ondo Finance made headlines this year for tokenizing real-world assets like U.S. Treasuries and offering yield-bearing products on-chain, pushing the boundaries of what's possible. Ondo Finance's CEO, Nathan Allman, joins the show now. Nathan, welcome.
Thank you so much for having me. It's great to be here.
I know the last time the three of us were together was
Was at
in
your
New
Ondo
York
Summit.
City at the
That's
Ondo
right.
Summit.
Absolutely.
It was a great time.
I know that this morning you have some news to announce, so I'm going to hand the mic over to you. Take it away.
Great. Yeah, we're very excited to announce that we completed a transaction where an investor using a tokenized deposit on JP Morgan's permissioned blockchain ledger was able to subscribe atomically to a tokenized treasuries product, OUSG, on Ondo Chain, on the first real testnet transaction for Ondo Chain. And so this is the first time ever that you can go 24/7, 365 from a tokenized bank deposit to a tokenized treasury. And it really starts to break down the barriers between the innovation that's been happening in the public blockchain ecosystem with what the banks like JP Morgan have been doing for a long time in the space.
So as a test trade, I'm sure there were a lot of engineers kind of, holding their knuckles tight and product people and everything like that. Ultimately, we want this to be a button push, right? So
Yes.
the whole thing about your value proposition is interoperability. Here's a great demonstration of it. This was a first shot. How soon can this grow into something that people do without even really thinking about it too much?
Yeah, we certainly expect this will be the first of many. I mean, the transaction itself was done in real time, but certainly there was a lot of hand-holding and prep
Observation,
work
yeah,
to
that's right.
get up to that point. But yeah, I mean, this is moving into production, and the Ondo Chain itself is gearing up for mainnet launch, and that's in the not too distant horizon is what I'll say for now.
Nathan, lay that out for our audience even more. What does this successful transaction mean for the future of payments? What future does this enable?
Yeah. Look, I mean, I think it's important to take a step back and observe that for many years, I mean, from 2015 until now, there's been almost entirely siloed efforts where the banks have been focused on using blockchain to drive cost savings and efficiency gains. JP Morgan in particular is very famous for their intraday repo facility where banks are able to move cash balances between each other 24/7, very quickly. And then in parallel, we and others in the public blockchain world have been focused on using tokenization to expand accessibility to things like the dollar globally. I mean, that's where we look at stable coins, $200 billion plus circulating today, several $1 billion in tokenized treasuries starting to, share some of that yield with the holders. But those efforts have been totally siloed until now. And it's very recent that institutions have started to look at the public blockchain ecosystem as an opportunity to diversify their investor base, and really seeing the distribution angle. And so I think these benefits are going to start to combine, the savings and efficiency gains that the institutions have been working on with the accessibility, that we and others have been working on. And, ultimately, cash comes in so many different forms today. Bank deposits, money market funds, short-term treasuries. They're all on sort of different settlement rails, SWIFT, securities settlement at the DTC, and so on. And I think through tokenization and the ability, leveraging things like Chainlink to connect different blockchain ledgers and provide for interoperability is going to really break down those barriers, and it's all just going to kind of look the same on the back end.
So I've got two questions about Ondo Chain. I hope we have time.
Yeah, we do. Andy's going to get the last two in.
Let's get the last two in. In the end state, right? How present is the Ondo Chain function going to be in a transaction? Is it something that's entirely, is it a front of house?
No, it's very much behind the scenes.
Right.
As I think most blockchains will be. I mean, I think, most investors will hold certainly public securities that ultimately settle on blockchain rails, but that won't be known to them. Just like investors aren't aware of all the clearing and settlement mechanisms that take place at the NSCC and the DTC today. So, I mean, Ondo Chain in particular also helps to facilitate settlement between different permissioned and public blockchain ledgers, with the help of Chainlink and other interoperability platforms. But yeah, it's definitely something that the protocol developers will be aware of, maybe the asset issuers to some degree, but not the end investors.
So that leads to the second question, which is, people who are looking to place their bets on different blockchains for saying what's going to grow, like where do I want to actually put my money and let it sit? How do you convey to them what your growth prospect looks like, what the value is, how on-chain kind of fits in? They're going to be seeing a ticker, they're going to be seeing a price. People may be tempted to buy it and stick it in their portfolios.
How do we convey to asset issuers?
To potential investors or to potential buyers of the tokens.
Of the tokenized treasuries products?
Or of just the on-chain, presumably, the on-chain token itself.
Sure. Yeah, look, I think we're still very focused on tokenized treasuries, and I think the market size there, at least is floored at the stablecoin market size of a couple $100 billion, and I think we've really barely started to scratch away at that. So I think in the next, year or two, tokenized treasuries will be a much larger percentage of that, and then, sky's the limit from there. Certainly there's $5+ trillion in, money market funds in the U.S. So I think we'll see them come on chain very rapidly.
Fantastic.
Nathan, we're going to have to leave it there. It was such a pleasure talking to you again here at the desk, and we'll see you around the conference.
Great. Thank you so much.
Thanks, Nathan.
That was Ondo Finance CEO Nathan Altman. Our next guest is the CEO and founder of WisdomTree, an ETF powerhouse with $119 billion in assets under management globally. As Wall Street meets Web3, he is helping redefine how investors access and engage with the markets of the future. Jono Steinberg, welcome to the show.
Thank you for having me.
Thanks for being here. You were on stage this morning, weren't you?
Yes, I was.
Your session was called, Can We Call It an Asset Class Yet? How Serious Investors Can Engage in Crypto. My question for you, can we call it an asset class yet?
It's not quite an asset class yet, but it's moving well along the way. Bitcoin is fully established for sure. Mm-hmm. And I think what we've done with CoinDesk with our Global 20 or the CoinDesk 20, those kinds of products I think will really go a long way to mainstreaming the asset class for investors.
I wrote that title, Jen.
I was going to say, Andy, weren't you there?
And I was also there,
Andy
and
was
I have
there.
to agree. Bitcoin's super established. CoinDesk 20 is going to be a great QQQ of crypto to make that rest of that distribution process easy. And WisdomTree, 119 billion in assets. I got to say, you accumulated that the hard way, right? It's all WisdomTree known for new stuff, for breaking down barriers, for giving access to new ideas, which means you need to educate and then you need to distribute. I guess done a great job in crypto so far. How about the tokenized products? How does that education process work, and how do you think about mapping out the market?
So for us, digital assets is a big initiative. It includes crypto, the ETPs. We manage about $2 billion. We have about 15 exposures, most out of Europe, but more coming in the United States. As a part of that, we are trying to sort of tokenize real-world assets. We now have about $150 million in tokenized assets, mostly in our money market fund, but also equities. We've tokenized gold. So I'm very bullish on tokenization on the blockchain as the next wrapper of the future, beyond ETFs.
I guess, is that what serious investors should be paying attention to when it comes to digital assets? Where do you think serious investors should be looking to?
First of all, serious investors, there are a million ways to skin the cat. So you don't really want to generalize. It depends on where they are. For crypto, the asset class, it's still very early days. Most institutions, in my background have not really allocated their 1 to 2 or 3%. If you did this by market cap of liquid assets, crypto would get a 2% weight, let's say. That hasn't happened to most institutions. But tokenization of real world assets, it's going to be a hard journey to displace the ETF, which has the least amount of friction. That said, when you think about the wrapper and you can make them programmable exposures, there's a lot of innovation that can come beyond just liquidity and convenience. And I'm very, very bullish, but it's a journey and we're in it for the long haul. But with this effort, I was 13 years behind State Street in ETFs. This time I wanted to be first through the regulatory door. It's easier to be first, but they made us work hard for it so far.
They did make it, yeah, they made it work hard, and they made sure the finish line was at a place where everybody was at a tie, which was, anyway, we got through that, but now I think the gates are open. So there's two things, right? Taking treasuries and tokenizing them, making them available on chain, taking crypto assets and ETFing them, making them, ingestible, right, into portfolios. Those are two different sales processes. So how do you think your distribution team, how do they think about that?
I'll tell you, what we were trying to do is we wanted to normalize crypto, the asset class, so that it could sit next to traditional assets as well as traditional banking services like the debit card. We also wanted to take traditional assets, gold, equities, treasuries, and get the seamless globalization that comes from the blockchain and blending that experience. That's sort of what our vision for this is. And much of my, there's crypto ETPs, which plays to the core business, and that my team does, that's what we do. We also have something called Wisdom Tree Prime, which is a direct-to-consumer effort. There, I'm still working through some of the regulatory hurdles to really launch it, but it's been like a 4-year journey. I'm close, but it's really an endurance test, this whole thing.
I mean, a lot shorter than the ETF journey so far.
Hopefully.
So far, right?
Yes, that's true.
Speaking of journeys, you just said you anticipate it being a long journey before tokenized assets can displace ETP products or ETPs. How long does that journey look like for you? What are you preparing for?
When you think about, like ETFs are like 32 years old. It was only a couple of years ago that they surpassed mutual funds from a revenue standpoint. So this will, and the ETF really satisfies investors. It's a very, very good experience. That said, you can't do peer-to-peer exchange of value. There will be certain things that the on-chain community has that others will want. When you look at your iPhone, it's not about a phone call, it's about the pictures, it's about the internet. Really, the on-chain community is the cutting edge, and they are going to have a better experience than traditional investors, and the other investors are going to want that seamless experience, like T0 settlement of all assets. Can't really be done on the old rails. So we're going to make that happen within Wisdom Tree Prime and Wisdom Tree Connect.
This is fantastic, to realizing the limits of the ETF wrapper, even though that's been the bread and butter of the business and where you've been a leader, and now going into Connect and Prime just seemed like a next logical step. Let's go with the regulatory approval so we can get that thing rolling. I'll be the first customer in line.
Thank you.
Jono, thanks so much for joining the show. We hope you enjoy the rest of Consensus.
Thank you. Thank you for having me. Bye-bye.
That was Wisdom Tree CEO and founder Jono Steinberg. Welcome back to CoinDesk Live from Consensus 2025, brought to you by MoonPay, the global leader in crypto payments. I'm Jen Sanasi, here with my co-host, Andy Bear. GSR is one of the earliest crypto trading firms, starting as a market maker in 2013. It has backed builders, provided liquidity, and traded across spot, derivatives, and options. GSR Chief Investment Officer John Laughlin joins this special edition of Markets Daily Now. Hello, John.
Hi.
All right, we got to start with a little bit of a scene setter. We're here at Consensus 2025. We've been talking so much about the markets and what's going on when it comes to institutions, but what have you been up to at Consensus? What have you been enjoying?
Yeah, just walking around and meeting people, connecting with, a lot of people that I know, but it's just a great, venue for gathering.
Great to see people IRL. I know so often we are stuck to our phones. We talk in front of a screen. That's how Andy and I communicate and do the show sometimes. And so it's great to be here IRL. Let's get into it. I want to ask you, what are we seeing in options flows?
So with the short dated, we see a lot of, kind of income generation, option selling out to kind of 1 week or 1 month. Also at the short end, we see just a lot of kind of noise, many players just sort of messing around with short-term options without any clear theme. At the long end, primarily, the theme we see is, people buying call options on Bitcoin out of the money, kind of out 1 year. So, 125,000 strike, 150,000 strike. And that's really looking for a lottery ticket like payout, betting on Bitcoin repricing higher sometime over the next 1 year.
John, you and I know each other a long time, and you spent decades really understanding the traditional options markets, both in equities and indices. What you just described is really different from how investors behave in equities, and certainly is absent of things that institutions have to do to manage risk. At what point do those two worlds collide, right? Because they're both kind of developed options markets. Where do you see them starting to cross streams?
Yeah. So I did spend 20 years trading options and running derivatives portfolios, looking for mispricings in equities, FX, credit, and rates. And I think that the main thing that I don't see, I guess there's several things I don't see in crypto yet. There is some call overriding, but it's not nearly as dominant in crypto markets as it is in traditional finance markets. And I think part of that is just the markets really rewarded people for kind of staying long the upside wing. And they believe that it'll continue. So we don't see that as much in crypto, but maybe as more traditional and institutional players from, TradFi allocators get involved in crypto, they might kind of bring some of those same, thought processes and behavior patterns. I think the other thing we see a lot more of in traditional finance markets is index, right? Like within credit, like the options are primarily on the index, within the S&P 500. Really a lot of the traditional asset classes are kind of very focused on index vol first, and we haven't seen that as much. Obviously, with the CoinDesk and Andy, you're progressing on your CoinDesk CD20 index and options on that, and we have seen some trades. We did, I think, the first trade in that. So I would say those are two themes that we might see develop here.
I hope you're right. Index options as a risk management tool are, as you say, they're primary. But even a year ago at Consensus last year, we didn't have Bitcoin ETF options yet. And now there's a lot in strategy options trade a lot. They're converts. We'd love to see index options in the United States someday. On the other hand, Coinbase goes and buys Deribit, and that's a scale-up maneuver. Do you see the two, I guess the on-chain option market and the traditional option markets continue in parallel, or does one start to dominate? We're still so early in terrestrial market derivatives trading, so how's that horse race look to you over time?
Traditional institutional allocators, if they're doing anything in crypto at all, it's going to be kind of on the CME or the IBIT options. Crypto native players tend to prefer Deribit. There's also Paradigm, which allows you to get kind of larger block trades done and multi-leg option structures. In terms of those merging, I think I might say there's probably a prerequisite for kind of more clear regulatory guidance, or maybe even legislation from Congress, before you really see the CME and Deribit kind of merge into the kind of same thing. I think right now you can trade on either. There's good liquidity on both. Arbitrage in between them is something that can be done, but it requires a lot of focus and high-speed automation. It's more of a market-making game. So as an end user, I don't think you're getting a significantly different or worse price in one venue or the other, and just pick one.
John, we gotta leave it there. I think we could talk about this forever, but unfortunately we are all out of time. Thank you so much for joining us at the desk. We'll see you around the conference.
All right, thank you.
That was
John.
GSR Chief Investment Officer John Laughlin. Let's now head over to one of the stages at Consensus. You're watching CoinDesk Live.
This is actually sort of my spiciest take. We're on a yield-bearing stables panel here, and I think that whether the yield is endogenous, internal to the stablecoin, or you get the yield by parking your money in an institution may not matter as much as people think it does today. I mean, I would love to have more flexibility for entrepreneurs to build the products that people, businesses want to use. But ultimately, if you look at the verbs, the actions people take with stablecoins, it's they'll spend them, they'll send them to someone else, they'll save them, and maybe they earn with them. And for spend and send, it doesn't really matter if it's yield bearing, because it's a very fleeting moment. If the transactions now are less than 1 second, they cost less than 1 cent, and so we don't necessarily need to have yield for that really atomic unit of time. Yeah. But then when you're saving them, well, look, you're not spending them. You might feel comfortable parking them somewhere, and so we're starting to see obviously this great development in yield-bearing stablecoins, and we want to see yield-bearing stablecoins because they're going to be super useful for treasury management and collateral and all these other things. Yeah. But for a lot of users and a lot of use cases, you might feel comfortable leaving a stable with, I'll just say because it was a recent announcement from PayPal, leaving it in your Venmo or your PayPal account or some institutional version of that, where you can earn yield that's passed through from the institution that you're storing your stables with. So I just want to point out, like, there are other ways to construct this product that might mean that the two assets look a lot more fungible and they solve the same use cases, even though the yield isn't actually in the stablecoin.
And just to add to that quickly, I mean, you see that with USDC and Coinbase, right? If you're leaving your USDC, depending on, again, regulation and what's allowed in your particular environment, but it's just not directly through the token, but they're paying you back on the back end for distribution effectively. So I fully agree with you.
Yeah.
Sam, I want to go back to that actually, because I think it's interesting. Do you think it's just like, so crypto historically has risen in like a zero interest rate environment, right? Yeah. Do you think that it's like the marginal opportunity cost that is now sort of, investors are now faced with a marginal opportunity cost for keeping something in a stable coin that isn't giving them, 5% interest that they could find in a bank account, right? So do you think that that is what's fueling the rise of the yield part of the stablecoin conversation, or do you think there's some other use case specific thing that's driving that demand?
Yeah, look, so we've had the term yield in crypto for a long time. We've seen these, like, frankly, ludicrous yield numbers in the industry. People offering 18, 20% and then saying risk-free. That's nonsense. We know what the risk-free rate is. It's something like 5% or whatever the treasury rate is. That's sort of like a classic economics term. And if the risk-free rate is going to be 5%, then people who are storing a lot of cash because they want to use it for investing, or they want to just save it in that format, or whatever their other reason for holding cash is, yeah, they probably should be receiving the 5%, and they're going to be a lot more motivated when it's 5% rather than 1%. But that said, I think that the current rise in stablecoin adoption, it's really, it's become uncorrelated from speculative use cases of crypto, where we're seeing stablecoin volumes and stablecoin transactions continue to grow, even though speculation is down/flat. And to me, that means that people are not, and look, most of that growth, as we mentioned, is in non-yield-bearing, fiat reserve stablecoins. So for me, that actually points to the current use case that's driving the market is probably in more standard send and spend use cases, as opposed, or maybe composing with DeFi, but the point is the yield stuff has not yet been what's actually driving the market, although I'm excited for the use cases that use yield-bearing stablecoins in the future.
I do want to go back to the ghost of yield past, right? I mean, we all remember Terra, and we remember Terra, Luna, UST, that stablecoin. Yeah. Ostensibly yield-bearing if you put it into the Anchor protocol, which offered 20% yields magically. And we all saw that thing nuke and cause a whole catastrophe 3 years ago at this point. Do you think that the ghosts of yields of past in crypto land present sort of a marketing challenge for this yield-bearing aspect of the current crop of stablecoins? I'll put this to you, Sam.
Yeah.
Because you mentioned it, like yield historically has been somewhat sus in crypto. And I think now we're starting to see like real yields come into the conversation in a different way.
Yeah, sus is the investing term for. Yeah, okay, fine. That's why I split these two different types of yield-bearing stablecoins apart at the beginning. There's this wrapped treasury asset that I think really mimics the risk-free rate, and then there's these dollar shares of hedge funds that are running some sort of strategy that, if you're going to participate in it, you should probably diligence and understand. And one of those, I think, is the one that's wrapping a treasury, is a reasonable place to park your treasury if you're an enterprise, or to save your money, or maybe to use as collateral for other trades. The other should be taken as a product that where you're looking to get yield based on some strategy. And so that's sort of the simple way of looking at it. And just to tie it back to your question, like, are we haunted by past stories? I think that the cleaner version of these, the one where we're wrapping a treasury, probably shouldn't be. It's a really straightforward product. And the other, I think they're going to have to make a case for the fact that they can do the yields they're promising in a safe and transparent way.
I think, though, this kind of gets to the regulatory point, right? Which is, for the most part, these treasury-wrapped stablecoins, these yield-bearing stablecoins, are securities. And so as long as they're deemed securities by regulation, you're going to be very limited in the use cases that you can use them in, right? You can't use them in DeFi. You can't really use them to make a payment. You can't send them off platform into emerging markets and different things. And so I think we really need, if you're going to truly have yield-bearing stablecoins at scale, the use cases have to expand. In order for the use cases to expand, you have to have regulatory clarity. And until we get that, I think it's going to be challenging. As you highlighted, Zach, I think yield-bearing stablecoins are 2% of the market cap today, 2.5%. And I think that's what's really preventing them from unlocking, is the fact that there really isn't a good way to earn yield in your brokerage account, right? So I think that's the unlock that we need to see.
Yeah, thanks for bringing us back to the regulatory pivot. I appreciate that. You did mention, people on the sidelines, right? Bank of America, others saying, hey, we need a little bit of clarity here out of Washington. Joe, I'm going to put you on the spot with this question. Do you feel like you have the clarity that you need as, a state entity to go ahead and issue a token of this nature?
Well, we are a state, we are a sovereign, and even though we are a sovereign, we still have to look at what the rails are for us to launch not only a stable token, but also a yield-bearing stable token. We've been looking at both and also working with legal counsel. We've looked at the OCC regs, Articles 8, 9, 10, and 12. We've been looking at MICA, which is the European regulatory framework, and we're still waiting for the Genius Act to formalize. We see what Canada has done here, and they've identified these to be securities, and we're trying to, pool all of that information together to build something that is suitable to the marketplace, that won't trip us up when we're, go out to market. Getting back to the yield-bearing tokens, we have been analyzing all the yield-bearing tokens that exist out in the marketplace, and I think over time, in order for this segment to grow further, there's going to have to be an understanding of the risk parameters that generate a yield that's anything over a treasury. So if it's between 20 and 30%, there's got to be risk parameters and a framework to understand what's going on, and you can disseminate that to the investing public so they can make better decisions about their investments or the transactions of monies.
Got it. All right, we have a few minutes left. We had a semi-spicy take already, so now we're going to move to the Galaxy Brain take section of the conversation. What do these things enable? What use cases are we going to look forward to in the 2 to 3 years that are unlocked by this concept, maybe of the endogenous stablecoin that bears yield in a crypto native?
Yeah, sure. So actually, I think that Ben, you made a point. Like, you're in a sophisticated market like the U.S. Why not put your money in a money market fund? Like, that's a reasonable alternative, and people should consider it, like, if that fits their needs. Well, there's things that you just cannot do with a share of a money market fund today. You've got lockup periods. You can only trade between 9 and 4. You've got contracts to write and people who have to review them, and you don't get this programmatic, permissionless flexibility that you get with crypto. And so what we're seeing use cases that probably are not the ones that bring people to this conference today, but maybe should be, which are things like you are a large company, you need to write hedge contracts against something, your delta, and you've got to hedge against the price of jet fuel. Well, today, you're going to be moving collateral from underwriter to take out options against those prices. This is like sort of an esoteric thing, but what we're realizing is that they're being incredibly capital inefficient today because they've got to store excess capital with each of the providers they're writing options against. I know there's a lot here, but what we're excited to see is people be able to move collateral mobility, so they can just be much more collateral efficient as they manage their treasuries. That's at an institutional scale, but I think individual investors and people will feel similar use cases as we move sort of down the complexity ladder and make these use cases more accessible to day-to-day people.
Yeah, Matt, same question to you. What's the next chapter here? What do you see this evolving into?
Yeah, I mean, I would really just echo that. Like, it just removes friction. I think it's very, very prominent and obvious for folks that operate on-chain businesses, whether you're a DAO, whether you're a protocol, whether you're a crypto market-making firm. Just the frictions of moving between your crypto holdings on an exchange to a brokerage account it's not easy. There's frictions there. It takes time. It's expensive, and so I think at least that's really the most important thing I think for now.
Yeah. And Joe,
yeah, absolutely. So in the state of Wyoming, we're going to be launching pilot programs. We're going to go through, the S&P 500 has 11 sectors. We're going to go through each and every one of those. We've done a lot of that work already. We're going to work with financial institutions, all the retail businesses in the area, and see where this is mostly applicable across all those sectors. And we're looking also to service those that are unbanked, and also the ones that are receive the less service. Getting back to your money market point, one of the other constraints are minimums across all mutual funds, 3,000, 5,000, 10,000. There's a lot of people that don't have access to the financial instruments that we enjoy every day.
Maybe a final thought.
Yep.
So we haven't talked at all about other fiat currencies on blockchains. I think that's really, really interesting. Today, it's denominated by US dollars. But at BitGo, we're having conversations with firms in Canada, in the Middle East, in Latin America that are saying, hey, I want to put a peso, I want to put a Canadian dollar, I want to put these other instruments on blockchains. And that becomes really, really interesting when you think about how these interact with each other and how it transcends commerce and payments. So super fascinating times.
It is.
Interesting times indeed. Thanks for closing on that note. Thank you to our panelists. Let's give them a big, warm round of applause. And thanks to you all for being here. Have a great consensus. See you.
Please welcome to the stage Michael Higgins, Ryan Rugg, and Ian Allison.
Hello, everyone. Oh, yeah, this is working because it just about fell off.
My name's Ian Ellison. I'm a reporter at CoinDesk. I've been there since 2018. That's a fun fact. I'm going to let the panelists, my esteemed panelists, introduce themselves. I'll start with you, Ryan. Go right ahead.
Thanks, Ian. Appreciate it. So Ryan Rugg, I head up digital assets for Citi's Treasury Trade Solution business. I've been with the organization about 2.5 years, and we'll talk more about Citi Token Service later. Prior to Citi, I worked for IBM, where I was head of their digital asset practice for the Americas, and we launched CBDC, identity projects, as well as several others. And then prior to that, worked for R3, fintech startup in the space, where we developed Corda. I was employee number 20, so I got to do everything from sweeping the floors to helping build, Corda, as well as go-to-market.
Mike, go ahead. Can you hear me through this? Yes.
I can hear you.
It's better, I can hear you. Mike Higgins, I'm the International CEO and Global Head of Corporate Development at Hidden Road Partners, based in London. Prior to helping set up Hidden Road 6 years ago, I spent over 20 years in electronic trading, multi-asset, and the bulk of my time in the foreign exchange markets. Very briefly, on Hidden Road, we are a multi-asset PB and clearing firm that was set up and funded by the buy side, so a sell-side business funded with buy-side capital. Over the past 6 years, we've been razor-focused on improving the technology behind the core infrastructure of PB clearing and margin financing in traditional markets, and applying those same applications and practices into the digital asset space. Ultimately, as a PB, we do one thing: we provide access. It's access to two things: access for counterparties to trade across the entire liquidity landscape unencumbered, and then access to balance sheet to trade across that in a capital and cost-efficient way. Recently, Ripple's in process of acquiring Hidden Road, and so that certainly helps us unlock the ability to deploy more capital against counterparties in existing asset classes as well as digital assets.
Nice. Ryan, Citi have been, people probably know this, Citi have been in this space for a long time. But you recently launched the Citi, I'll get the name right, Token Services.
Yeah.
Talk about token services. What's new? What problems are you kind of solving, and so on?
Yeah. So when I joined Citi 2.5 years ago, we had been working on a lot of projects on various networks with the Regulated Liability Network with the Fed. Now it's kind of matured into Project Agora. But to be able to connect to a network, you first have to be able to move a token safely and soundly around the four walls of your institution. So last year we launched what's called Citi Token Service, and it was based on the thesis statement that our clients gave us. They wanted 24/7, 365 payment and liquidity, regardless of bank holidays, regardless of cutoffs. Where if you think about the traditional market, if it's 5 p.m. in New York on Friday, it's 5 a.m. in Singapore, and typically you couldn't send money. So what our treasurers do of our multinationals is they park this money early in the day, or to make sure that the money's there. And now you can do it just in time. So if it's Friday night, if it's Saturday morning, you could send money. And the interesting thing to me is we started off with liquidity and payments being our thesis statement to solve for our clients, but we've now seen it go into the cap markets with, recently it was Chinese New Year in Singapore, but we had a client that wanted to settle US equities. So, again, they would typically forecast for what their margin calls are going to be, what their kind of cost of funds were going to be in that market. Now they can move it instantaneous. So we've targeted our large money hubs first, which is US, UK, Singapore, and Hong Kong. And those are the ones that have the largest cutoff, as well as the largest amount of friction. We move on a daily basis somewhere between $4 and $5 trillion for our clients, but there is friction in the traditional market. So we've kind of taken a two-prong approach where we are updating our traditional infrastructure with solutions like 24/7, Spring by Citi, real-time liquidity, but also looking at more innovative structures that are using emerging technology like Citi Token Service to be able to provide that access, transparent, and liquidity for our clients.
So it's live and it's saving the bank money.
We have dozens of clients on it, moving multi-million transactions 24/7. And as I mentioned, it's really interesting to see, where the platform is going. And everything we do is dictated by our clients. We build for our clients, by our clients. So every additional hub that we add, every additional currency that we have is really mandated by them. And We're seeing them not just use it in off hours. Like our thesis statement was that it would be used when the branch was closed. But we have large clients that are just using it for, real-time settlement instead of having to do batch settlement at the end of the day to reduce costs for, reconciliation and stuff. So yeah, it's live.
Lovely. Mike, do you want to talk about securities on chain from the prime broker, through the prime broker lens and all that stuff, collateral and all that stuff?
Yeah, sure. I think, can you hear me okay?
Yep.
Yeah?
Okay, yeah.
Sorry. Look, being able to move value 24/7 has a huge impact, not just on the crypto space, but in traditional markets as well, right? And really upgrading that infrastructure. And that's ultimately going to change the way commerce is transacted. From the lens of a PB, traditional PBs operate in a T1 and a T2 cycle. In digital assets, we're already at T0 and instant finality, right? So these solutions will leapfrog traditional prime. So going through the lens of PB, the biggest knock-on benefit is actually on the risk side of things. If you think about what we do, we give access to counterparties, and we require them to post collateral based on their portfolio and all the assets that make up that portfolio. The math behind the margin methodology of how much collateral they need to post is based on and calibrated on what are the assets in the portfolio, the size of those assets in the portfolio, but also the ability for a client to top up margin and meet collateral calls, right? Cure periods form part of the legal framework and are part of your risk management. And so being able to ship assets 24/7 reduces the risk from a PB and shrinks what's called your MPOR, your margin period of risk. And so the knock-on to that is prime brokers are able to price that more aggressively from both margin as well as fees. And so that makes it cheaper or ultimately more efficient for counterparties to trade those assets. And if it's more capital efficient, then the treasurers can hold more collateral and generate more yield in corporate treasury. So ultimately, tokenizing assets improve 24/7 margining, better real-time risk management, and better settlement windows, which leads me to the point of who benefits from it. So certainly the prime brokers have less risk, but if you think of the proprietary trading firms or the high-frequency fraternity, they can reuse their capital over and over. And then the big hedge funds or the long-onlys, they need to post less collateral, and so again, earn positive carry by holding that in corporate treasury. So big step forward.
Nice. And the Ripple deal, do you want to, in the context of securities online and on-chain and all that stuff, but I used to report on, who's going to be the main crypto PB, and there was lots of companies jostling for that position, who's going to, in that. But tell me about what Ripple's going to bring to you guys, and also what you're going to bring to them.
Sure. Yeah, I think it's definitely both sides. But I think it's important to take a step back, right? Prime brokerage, clearing, and margin financing has really been a facilitation business built into banks over the last 30 years. Since 2008, that's a sub 5% return on invested capital. And so you can see this in a number of areas. The number of FCM, GCMs on a CME in 2008 was 153. There's 61 left in the world. Citibank, the largest FX PB, kind of puked out that business, and there's a number of these themes. And so Hidden Road was set up to be a multi-asset, non-bank prime, and there was 3 pillars to do that. The first was rewrite the technology. Banks are organized very vertical, right? So you have a clearing system for equities, a clearing system for foreign exchange, a different clearing system for listed derivatives, and certainly nothing in the crypto space. And so we wrote a single horizontal clearing infrastructure using modern technologies, and that's important. It allows us to manage risk, cross-asset, cross-process, real-time, 24/7. The second was get the entity regulated by market regulators, and so we've done that. And the third piece is to the point of Ripple is, well, how do you fund that business? Banks have been predicated on rehypothecating client collateral to fund prime businesses, which is part of the reason they have punitive capital charges under the likes of Basel III. And so we looked at public markets versus private markets and said, right, we'll fund it with private credit, which has been funding businesses. We took about $500 million and deployed that. We ended up with a supply-demand problem. And so late last year, we said, right, time to solve that supply-demand problem. Let's go look for capital. It coincided with the change of administration in the US, which had a positive tone in digital assets into our business. And so the conversation with Ripple was very organic. They were a user on the platform. And when we looked at it, having access to that balance sheet and that treasury would allow us to really deploy material capital in traditional assets. And in the crypto space, that infrastructure has not really existed. And so solving that gap to put real balance sheet in the digital asset space will allow real, true institutional adoption. So that's on the Hidden Road side. There's two knock-on benefits. One is we'll be able to lend a little bit more XRP, and two is Ripple's stablecoin made its debut end of last year. And so being able to use that as good collateral and accept that on a 24/7 basis is a major step forward. Looking at it the other way, Ripple's an L1. And so, getting more assets on chain is a big important piece. Hidden Road runs a very large traditional market business. So cross-border payments and foreign exchange, we do about 30 billion a day. And then our fixed income business, starting with repo, being able to move that on chain are things that we're looking at collectively. But exciting development with Ripple.
Sorry, did you say XRP is going to be used as collateral?
Well, we already accept digital collateral as good collateral, and I'll give you a really good example. Today, there's many firms trading basis, right? So they'll trade Bitcoin spot against CME front-month futures. None of the bank FCMs, or even non-bank FCMs, can take Bitcoin as good collateral and finance span margining on the CME. Go back to XRP, you have ETFs that are there, you have CME futures coming online, and so taking XRP spot as good collateral and providing finance against it is certainly part of the playbook, and I think all the trading firms out there will benefit from that.
Great partners. Ryan, I used to write a lot about enterprise, sort of blockchain, old, in the crypto space, and there's always this idea of public versus private, and the banks are more comfortable on sort of very private blockchain, some of them. But this seems to be changing. Do you want to talk about where we are now with the public versus private debate?
Yeah, it's definitely been a journey. I think back to 10 years ago at R3, and when we initially started our journey in that space, we were looking at Ethereum and different public chains, but due to the compliance, KYC, AML sanctions that large enterprises have to abide by, we couldn't be on the public chain. So hence why at R3, we built Corda, and you've seen other kind of private permission versions of platforms kind of evolve since then. We are on a private permission version of Ethereum because, that was all that was compliant for us. Like, Citi's not going to operate in the gray area unless there's clear legislation and rules and regulation about being on public. Like, large enterprises like Citi can't do that. So I think that the technology has definitely matured a lot in the last 10 years, but we still do see vulnerabilities and like bridges and the whole interoperability between different public chains. So I think that it still needs to evolve, but in the meantime, we are on a permission version of Ethereum with the aspirations of, depending where regulation goes, to make sure that we provide the best services for our clients. So I think it has developed a lot, and I think more to come kind of out of DC in the next, hopefully, couple of months.
Really great. And talking about the kind of cash leg tokenized, we used to report on JPM coin a lot. I know that JPM have changed. They've rebranded it. Nobody wants to be a bank coin, it's not. And actually, going way back, I actually did a story about Citicoin because there was a kind of proof of concept, let's just say. Because I remember I did that story in 2015, and I know that you don't do a Citicoin. It's a Citi token services. But the question is, interoperability between banks. You talk to the JPM guys. I know you work with them, Project Guardian and stuff. Where are you with interoperability?
I mean, we already started. We started with the network play before we actually had Citi token service. So we were working with the Fed on the regulated liability network way before we even had a Citi token. And we've made some very different design decisions. When I was at IBM, I advised a bunch of different banks in this space, and you don't need a blockchain if it's just going to be an internal token. We've always had aspirations of connecting externally And the thesis statement that our clients want is they want multi-bank, multi-border, multi-currency, always on liquidity and payment. Like, why does money not match the speed of the internet, right? So like, how are we going to get to that evolution? And it is going to be multi-bank. It is, and we're part of several initiatives that are working on this and trying to drive that forward. But, you know, I also believe success breeds success. So, you know, right now, being able to be live and adding value to our large multinationals that operate on a 24/7 basis to be able to move their cash across our 90+ branches actually adds a lot of value to them. It adds a lot of transparency and value, and like they don't have to, you know, forecast money to the different regions across the globe, that they can just do it instantaneously. So yeah, I think interoperability is important. We're actively involved in several initiatives around this space about, you know, and I joke with the team, if I had $1 for every network that approached me to join, you know, I could retire. So it's definitely been on the forefront of our mind.
I bring it up because sometimes I got the feeling that JPM were not quite so into interoperating with other. I mean, someone said to me that interoperability and capitalism don't mix, which is a sort of interesting. Anyway, going back to on-chain securities, BlackRock, Biddle, that fund, Mike, that's been a huge success. Tip of the iceberg?
Completely a huge success. I think, don't quote me exactly on this, but I think in the first 2 months it amassed an AUM of about 500 million. I think we're closer to about 2 billion. But it's the play on, or piggyback on what Brian was just saying, right? It's the ability to move collateral 24/7. But one of the key components of this is moving collateral that pays positive carry, right? Like gold is a non-carry asset. So if you look at investment portfolios, gold is a small portion of it, right? It doesn't pay interest. Large shareholders of gold are actually are the central banks, similar to Bitcoin. So we'll see if that unplays. But going back to you know, BlackRock's 2A7 funds tokenizing this collateral, I think it makes a lot of sense. You can meet collateral calls, you know, around the weekend. You'll see, you know, the Templetons and the Vanguards and the rest of these funds start doing it. Their infrastructure really allows them to do it. So certainly tip of the iceberg. And again, it improves the ability to cure collateral around 24/7, and that ultimately will improve cost and for counterparties. So yeah, early on, but very exciting.
And beyond tokenized money market funds, which obviously there's a lot of people involved in that world. Ryan, I mean, I did a story recently about Citi, and they're doing pre-IPO shares. And interestingly, going back to R3 and the R3 guys, who are great, by the way, they work with SDX, the Swiss exchange. So where are you guys at the bank looking beyond money market, other things, credit, stuff like that?
Yeah, so, you know, our issuer service business, as you mentioned, recently formed the partnership with SDX on, you know, later this year, having the access to pre-IPO shares. I think it's, you know, to our strategy, and like similar to you, it's build by partner. We're not going to build every solution out there that our clients want. You know, we are building Citi Token Service. I think it's foundational to be able to move, you know, cash around instantaneously instead of having to go back to, like, you know, TradFi rails for our clients, but like also partnering, you know, and right here, like, our clients want access, transparency to, you know, pre-IPO shares. So being able to partner with an organization like SDX to do that, and I think that's going to continue in this space. These partnerships with large enterprises, as well as, you know, our venture cap team has a big book within this space also that we're going to invest in, like, these companies also, because we're not going to build every solution out there, and I think that's important for the future.
Really good. And Mike, where do we draw the line? You're going to tokenize everything that's got any kind of value.
Yeah, I think it's simple. I think you look to tokenize, at least today in this world, before we move to a 24/7 market, which is going to happen, and then things should, you know, virtually all tokenize. But today you look at, you know, does it make it more accessible? Does it improve liquidity? Does it improve transparency and operational efficiencies? And so, you know, we've started with the money market funds. You have stable coins. I think private credit is important because you'll have better tracking of IRR. Repo, I briefly mentioned, Brian already mentioned, that's a big space, right? That will improve capital efficiencies, liquidity for intraday liquidity, not 24-hour periods. I think that's where we start from. But I think if we think, fast forward, if markets move 24/7, then having collateral that, is recognized as good collateral and to be able to move that around in line with those markets, I think is usually important. So we're at the very early start of this.
I hear people talking about tokenized real estate. It's been around for ages, like an apartment block somewhere. But Ryan, you guys actually did some proofs of concepts, explorations, with land registries and stuff.
Yeah, when I was at R3, we were working with, at the time, state of Illinois on a land registry, because the way they explained it, some of these land registries that they have within the state, if a tornado touched down, literally the whole entire land registry would be wiped out. There was no digital copy of that. And, why do people have to do, title insurance and the whole title effort? So being able to digitize this whole entire process, working with the state on that. But one thing I'll say overall about tokenization of different assets is a lot of what I've seen is if there's a shadow ledger or a shadow, like a regular, the system's not going to be the system of record and you have to go back to the TradFi rails, it's not going to work. Like it's created like conflicts, and I have seen some solutions, but a lot of them haven't scaled when they have to go back to the traditional rails. You're just kind of creating, two shadow systems. So I'd say, natively issued assets onto the ledger, onto the blockchain, are much more efficient, and I've seen like scaled better.
Really good. And last sort of thing, I guess, regulation is coming. US, Europe, slightly different. But I'll start with you, Ryan. What's your view on where we're going under Donald Trump?
I have to say I'm very optimistic about this new administration. The last EO that was issued under Biden, I was working for IBM, and I got to go down to the White House and speak. And, they were much more reluctant on the technology, believing that it was going to be, kind of critical infrastructure for the future. Where now I'm down there and, advocating and working with our bank reg team about, equal legislation for equal risk, equal activity. And they really are open to these conversations. And, I'm very optimistic by the speed that these stable and genius bills, even though we had a little stumble, last week, that they're moving, that, I want to make sure that, large enterprises like Citi have ability to have a seat at the table if our clients want it.
And Mike, last thing, is there a significant risk maybe from having everything on chain, everything whiz-bang on a blockchain? I don't know, I sometimes wonder that maybe we could be stumbling into a black swan event or something down the line.
Just to comment quickly back on the regulatory side, I'm pro that, but my fear is that we try to shoehorn this new asset class into existing TradFi regs when that may not be the opportunity to create something new and unique. But the Stable Act, the Genius Act are really important on the stablecoin markets to get that certainty. If you look at that market cap today, it's less than 250 billion. I think those stablecoin issuers will become very large holders of U.S. Treasuries, and the U.S. government likes that. And to be able to export dollars around is really important. But I think the approach we should take is probably like one where we did in the early stages of the internet, right? It's a pro innovation, light touch regulation. I think that is key. But yes, there is real risks of putting everything on chain. You've seen lots of hacks in this space. We're getting much better at those things. But I'll pause there.
Yeah, I think we're almost at time. Do you see? Are we heading towards another black swan event in crypto?
It was actually interesting. Right before this panel, I was having a conversation with a law firm that is actually litigating for one of these big hacks. And it is a completely different environment. The speed, the transparency, within minutes, the whole entire market knew what happened. And typically they are able to, not release the information to media right away. It's completely changed. So I think the whole dynamic of the market and the speed and transparency that this adds is changing the way financial services can be done.
Well, listen,
Bybit was a perfect example of that, right? The hack was immediately known.
Yeah.
If you think about, 2008 and Lehman Brothers, you didn't know what was happening for days. We knew pretty quickly. Ben was out there and solved that, right? That's hugely important. So I think there's more positives to this than drawbacks.
Yeah, the Bybit hack and OKX on hand to launder the funds. Anyway, Both great sports. Thank you so much,
Ian.
both of you. Really appreciate it.
Thank you.
We're coming to you live from CoinDesk Studio at Consensus 2025, sponsored by MoonPay, the global leader in crypto payments. GM, good morning. Welcome to the Milk Road Show on CoinDesk Live at Consensus. As I said, we got Kyle in the house. We're going to be talking all about what is happening in markets, what's happening in macro, and where we see the opportunity for crypto investors for the rest of this year. Now, if you are a CoinDesk follower, you might not know myself and Kyle. We're the co-owners of Milk Road, a media company that produces content for crypto investors. We have a daily newsletter, podcast. If you do know us, thanks for showing up again. Great to see you. Always good to be back. Today, we're going to discuss a few things. Should you be buying, should you be selling, or should you be holding right now? What are you doing with your crypto assets? Macro, what's going on in macro? Trump, China making some deals. Is all the macro noise over? Can we move on from that and forget about it? And then, two big gainers in the past week. Ethereum catching a bid, absolutely rocketing right now. And then Coinbase over on the equity side, up 20% this week. What's happening in Ethereum? What's happening with Coinbase? We're going to touch on that and so much more. Before we jump in, if you are not subscribed to the Milk Road newsletter, I highly recommend you do. Why? 5 minutes every day in your inbox. You get a laugh and you get some great crypto investment advice. Check it out. Hit the link and subscribe today. Also, today's episode is brought to you by Ledin. Get cash without selling your Bitcoin. It's also brought to you by CoinShift, powering top crypto treasuries with their yield-bearing stablecoin, CSUSDL. With that, Kyle, what's up? That was a long intro with you just sitting. It's not usually like this where you're sitting beside me.
Hey, you know what? It's fun. I'm glad to be with you. We're in Toronto, which is a city that Jay and I both lived in. It's actually the city Jay and I both met. We met here in this city. And you know what? I got to say it. It's all about the Leafs today. It's all about the Leafs. Go Leafs, go. I know our fans, a lot of them from the U.S., so you probably don't care about hockey, but we do. And we're actually going to the Leafs game tonight, so I'm excited. Game 5 against Florida. It's going to be a big thing. So that's actually what's on my mind. Screw markets. I don't care.
Screw
right now.
markets, screw crypto. Let's go Leafs. Okay, but I know you're not here to listen to us talk about the Leafs or sports. So let's talk about crypto. Kai, this has been a bit of a messy cycle and a bit of a confusing cycle for crypto investors. A lot of hope and a lot of belief coming in to Trump's inauguration. Hey, we're all going to the moon. Markets are going to go higher. Everything's going to go higher. It's easy street, right? Well,
That's
you know what? It's not easy street. So where are we? Where are we in the current market cycle in your view right now? Give us just sort of help us understand where we are so we can understand where we're going.
Yeah, so at Milk Road, for those, I know there's a lot of new people listening today, but we talk a lot about, and what we believe in for our investment framework is the business cycle, the liquidity cycle. So when he's saying cycle, I believe that's what you're referring to here. I know a lot of people talk about the crypto cycle, this 4-year thing. We don't necessarily abide by that, although the 4-year thing has happened, I think, because of the business cycle, because of the liquidity cycle. And so when we look at markets, that's where we tend to focus our thinking on. If I take us back to when Trump was inaugurated, around that time, we actually started to see financial conditions tighten, right? The dollar went really high, oil was going high, and so in that world, financial conditions tightened, liquidity was actually going down. We saw a pullback in new global liquidity I'm talking about here. And in that world, we actually started to get a bit bearish. I know everyone was euphoric and excited in December, and it was a great time because we were like, hey, finally the shackles are off and crypto can flourish. And we probably got a little bit too excited. But I think what really happened was financial conditions tightened. The business cycle actually ended up pulling back a little bit. And so we figured, and we said in December, we put a thing out to our members, our pro members at Milk Road, that, hey, we actually think we're probably going to see a pullback here, which we got over January, February, kind of March. Then things got even worse than we expected them to. We thought maybe a 20-30% pullback overall in the market. And I mean, we did get about 33% or something in Bitcoin, I think was the final thing, something like that. But obviously everything else got completely decimated over that time. And what we sort of saw in that moment was, you know what, financial conditions actually started loosening around March and April. So we were actually getting quite excited. Global liquidity started to pick back up. And what we believe is that crypto sort of follows that, but there's generally about a delay, like 3 or so months, right? Now it's not perfect to that, but something around that time frame. And so around March, April, we actually started to get a little bit more bullish. And then of course, Liberation Day came and that ruined everything, right? And everyone was kind of caught off guard. And that was fine though. What we believed in that moment was this wasn't really anything crazy in the macro because we figured that these tariffs weren't going to stick around. It wasn't going to be as bad as it seems. We're not the doomsday type people that you heard a lot of. And we were kind of right on that, right? Like a lot of this stuff's kind of gotten solved. It's not gone away, but it's gotten a lot better than what it was on April 2nd or whatever it was. And so basically what we said is, hey, once this tariff stuff gets kind of figured out, we start to go back up again. Because again, financial conditions have loosened. The dollar is way lower than it was from back in December. Oil is like below 60, right? So the things that we needed to see on the macro side actually got cleared up, but we had that tariff scare. And so that sort of brought sentiment to its lows, right? Everyone sold off. And so to us, we were kind of like, you know what, we're oversold here. This doesn't make any sense. April 8th, we put out a call. We said, hey, we're going all in and we're buying a bunch. We did. That ended up being an amazing, incredible move. And I think what's happened a little bit here is sentiment just gone back to normal. So we kind of just like a mean reversion, right? Reversion back to the mean. Plus, financial conditions have loosened. The dollar is much lower. Liquidity has continued to improve. And so I think we're actually on a path here where, you know, we're not just back to where we were after Liberation Day, at least. We're actually much past that. And I think there's probably still some room to go in that. And so I think we're due for a really good year here, in my opinion. Again, this assumes that what we're hearing right now in markets in terms of Trump making deals with China, making deal with, you know, Japan, with India, UK, those actually go through. I don't think we go back to zero tariff world. I think we don't stick with whatever it was, 250% or whatever it was with China. I think we probably find some middle ground, and it's probably somewhere around 10% on select goods. And I think overall that's probably a good thing for the US, a good thing for the economy, and I think we'll go back to kind of where things were, and I think the business cycle will start to pick back up. So overall, I feel like things are looking really good, but I've been saying that since early April when things were not so good, which to be honest, so that's the time you want to be saying that. Now I'm not as excited. We were telling our people, hey, you want to be buying early April when everyone was scared, right? Now we're not really in, so it was consensus that the world was ending 4 weeks ago, whatever it was. That's the time you want to be buying. That's the time you want to be allocating capital. Today, it's not that anymore. Now we're sort of like maybe 50-50. There's still your doomsday people, we're going to a recession, like Trump's an idiot, like all that kind of stuff. And then you have the other 50% that's like, hey, we're back and we're good and we're so back. And so in those moments, I'm not necessarily like flooding into markets at this point. I don't think anyone really should. We've obviously had a huge run over the last couple of weeks. But I think, you know, over time, over the next 6 months or so, things do look pretty good. And I think there's a lot more room to run here in crypto and equities.
I love the bullishness. The only thing Kyle's more bullish on the crypto is the Leafs right now. Everybody the past few months has turned into a macro expert. Like every group chat I'm in, everybody's just all of a sudden all we're talking about is tariffs and macro and central banks and what's the Fed going to do and trying to predict things that are quite honestly very, very difficult to predict, next to impossible. Are we at the point now where we can stop being macro experts? Like, is it over? And when I say is it over, the show goes on, obviously, and the politics will continue and these deals will continue to be made and we'll be watching. But can we sort of pay less attention to that in our investment strategies?
If you're in crypto, I would say somewhat, because crypto's not really impacted by tariffs. If you are investing in equities, then you need to pay attention, because depending on what tariffs stick around, which ones don't, are going to impact certain industries and certain companies, depending on where they are and where they get their products from and where they manufacture, et cetera. So it's a more difficult outlook and world for US equities, and crypto not so much. That said, I think macro always matters. I think this is what happens is people forget about the macro during good times, and that's when all of a sudden they get caught off guard, right? And they get caught offside. I think that's what happened back in 2021, right? Everyone was so euphoric, so excited, and then it was like, hey, we're raising rates, we're doing QT, and everyone's like, bull market continues, and it was like, well, obviously not, right? Like, liquidity is about to leave everything. And so I think, look, it's not going to be as front and center as it was the last few weeks, because you don't have Trump holding up a big sign and taxing the world, tariffing the world. I think that's kind of where we're getting, that's alleviated. But I think it matters, because if you want to know where things are going next, then I think it really is all about macro. Crypto is a macro asset. And so if you want to understand if we're going, Bitcoin's going to do well or altcoin's going to do well, you got to understand the business cycle. You got to understand liquidity. And so, look, as I said, I think there's room to run here. And so maybe you don't need to pay attention to it every day. But I think if you want to try to figure out when we're going to get our next pullback or our next longer sort of bear market, then I think the macro is going to be the thing that tells you that. So I do think as a crypto investor, you do really want to understand macro.
Right, it's a key part of your toolkit
100%.
in order to be a seasoned investor that has a good, well-rounded perspective. And as you said, I think a lot of people got caught in December, in early year, thinking, not paying attention to the macro side, not looking at the financial conditions globally, and then getting caught offside.
100%. No matter what you're in, crypto, you're in equities, you're in gold, you just want to buy real estate, you got to understand macro, right? It just is an integral part of our world and economies, and so it's what moves assets, right? And so I think it's just an important thing to keep an eye on and try to wrap your head around. I know it's not easy. Macro is a very difficult, complex subject, but I mean, Milk Road will help you. We're launching actually Milk Road Macro in the coming weeks, and so there's our simple version to help you guys keep an eye on macro, so keep an eye on that. That'll be coming out soon.
I wasn't even trying to plug us, but thanks.
No, I got you.
Thanks for plugging that.
That's what I'm here for.
Okay, let's talk about ETH. We got to talk about ETH for a sec. As we record, almost at $2,600. Okay. It's up 60% in the last 30 days, 50% in the last 14. Just catching a bid right now. What's your take?
For me, I think this is a mean reversion. It was so oversold, right? And there was so much hate. You see it on Twitter, you see it everywhere. Just everyone hates it. And it doesn't really make sense, the hate for it, right? It's still the place where all the biggest companies in the world decide to build on, right? It still has the most developers. There's still the most activity and things going on. I know, of course, Solana's doing well, and there's Sui, and there's all these others that are coming up as well. So, I'm not saying it's the only show in town, but it's still the biggest, longest standing, has the most liquidity. It's the largest by a long shot. And so, all the FUD, all the doomsday stuff doesn't really make sense. And so, to me, it was kind of obvious that whenever markets decide to turn, that it was going to catch a bid. Did I think it was going to be that fast, that quick? No, absolutely not. So, I think it made sense there. Am I super bullish on it going into the rest of the year? I think it does well, but will it outperform Solana? Will it outperform Bitcoin? I don't know. I don't really know yet. Typically what I see is when the ISM, so this is sort of your business cycle, when the ISM picks up above 50, that's when we typically have our alt season. In that world, ETH will do really well, right? Obviously, other things will outperform it that are much smaller, but I think in that world, it will do really well. We're actually not there yet. We've had this kind of delay in the business cycle because of tariffs, because of what Trump has done. And so I think we're at 48.7 or something like that. We were above it. And so in that moment in November, December, we were above it. And it looked like altcoin season, things were going to go crazy. And so we're back below. So we'll see what happens here with all this resolution and tariffs. I think it's probably going to pick back up pretty quickly. And I think in that world, ETH will do well. Will it outperform Solana? Will it outperform a lot of other things? I don't know. I think it's probably tough, mainly because it's a $250 billion asset. It's freaking huge, right? Most of these other crypto assets are 50 billion or 20 billion or 10 billion or 1 billion, right? They're much, much, much smaller. And so It's a lot harder to move a $250 billion asset. Now, I know Bitcoin has had an incredible run over the last few years, and it's $1 trillion or 1.5 or whatever it's at, maybe close to $2 trillion. But it's got people like Michael Saylor who will throw billions at it on a weekly basis, right? ETH isn't getting that right now. I don't know if it ever will, right? Like at some point it will, I'm sure, but not today. And so I think it's just going to take a lot. Overall, I'm bullish on ETH. I think what Ethereum is doing is the right thing. I think Ethereum is building for the future, and it has the right kind of like scalability path. So I am very bullish on what they're doing. Obviously, Coinbase using them and Kraken using them, et cetera. So I'm excited for what Ethereum is doing. But is it the thing I'm most bullish on? Probably not. But I don't think it's a bad investment.
Let's look at one of the things that I know you are most bullish on, which is Coinbase. We were just on stage with John D'Agostino, head of strategy of Coinbase, talking, not talking so much about Coinbase, but I want to get your takes on Coinbase also having a great run, as joined the S&P 500 this week. What's your take on Coinbase and that as an investment going forward?
Yeah, look, I think Coinbase is one of the best companies that are run in crypto. They've been around the longest, pretty much, in crypto. They've been through it all. And what really excites me about them is they're diversifying their sort of revenue streams and their products, right? And not only are they an exchange and doing a lot of the like centralized stuff, they really are building at the forefront of the decentralized stuff, right? In the on-chain world. And I think that's really exciting to have a company that's that big, has that much capital, to be building both the centralized things. I mean, they just acquired Deribit, right? Another massive global centralized company for options. But then they're also really pushing the limits with Base, with Coinbase Wallet. They're doing some really cool things there. And I think they're going to do a lot to bring things on chain, right? Bring companies on chain, bring people, bring capital, and I think bring assets on chain. And so I think that really, really excites me. It reminds me of the sort of like early days of like, let's say Apple or Amazon or Google, right? Where they're very crypto native, right? And Apple and all them, they were very internet native. And so, you know, Amazon was able to pass Walmart and do a better job of Walmart in selling, different commerce, like whatever it was, because they went all in on the internet, right? And they were able to kind of leapfrog Walmart. Walmart took, 10, 15 years after Amazon to get online and build their online store. And so I think, yes, banks are about to start custodying assets, crypto assets and all that, but I think when you have a crypto native company that's doing it, that's really pushing the movement to kind of bringing the financial system on chain, when you have a company like Coinbase doing that, I just think that's super bullish long term. Obviously, they've had an incredible run here over the last week or so. I think they're up maybe 30%, both because of the acquisition of Deribit, two, because, just crypto has done well. So obviously, it's kind of a caveat of that. And then also, joining the S&P, which I think is massive. It's starting to start to get some passive inflows into it. I think that's a really big deal. The other thing to remember about Coinbase, they still have $9 billion in cash or something like that. Maybe it's even more than that today. They didn't have to put a lot of cash into Deribit. I think they acquired them for 2.7, 2.8, but it was only $700 million in cash, right? The rest was in equity. And so, we just talked about the size of Ethereum, which is a $250 billion asset. Coinbase is today 65 billion, right? So it's still fairly small. And so I think Coinbase, this, if you want to call it cycle or whatever, this next year is going to do extremely well, even though we're about to have a bunch of IPOs from other companies, which might sort of eat into it. But as John was saying just on stage before we came in, he's like, I'm not worried about that because what we're doing here is growing the pie, right? And I think Kraken IPOing, Circle IPOing, and the list of others IPOing is only going to grow the pie of crypto. It's going to grow its legitimacy. It's going to grow kind of the education awareness around crypto. And so I think ultimately that feeds into and benefits Coinbase, right? So short term, I think Coinbase is going to do very well here for the rest of this sort of bull market that we have. And I think long term, I think Coinbase is, again, it's like these Make 7 companies where you can just buy this thing and buy it over the next 20 years, and it's just going to continue to do well. Now, that's assuming they continue to innovate, assuming they continue to execute at a high level, which they have been doing. They have an incredible team. And so I'm extremely bullish Coinbase and absolutely love to see what they're doing.
Yeah, you put out a report a few weeks ago saying that you believe Coinbase could be $1 trillion company someday, right? Currently,
many years from now.
A bold call though, a bold call for sure. When you look at Coinbase, any predictions you can give for us around market cap or price or what you think might happen in the next year?
in the next year, I don't know. I don't like to do predictions in the short term. I forget what it even is at right now, maybe 250, 260.
He's about 260, yeah.
Yeah, 260. I mean, I think it's going to be one of the best performing stocks, and that's not even just in crypto. I think in general of the year. And so I think it's going to do multiples over the next year, which it's done also the last couple of years. But I think it's got a lot of room to run here. I think there's a lot of capital that is ready to flow into crypto. And I think a lot of that capital, which is the institutional level, right, the kind of TradFi level, a lot of them aren't going to come into these like $500 million, billion liquid tokens, right? I think that's just not the norm for them. They don't really understand that. What they do understand is revenues, business models, right? They understand Coinbase's business, or at least they can wrap their heads around it if they put in a little bit of effort. A lot harder to wrap their heads around something like Solana or Sui or like whatever DeFi protocol. And so I think with that, the large amount of capital that's coming in, obviously that's going some to the ETFs, but I think they're going to want to go into assets outside of just Bitcoin, and I think Coinbase is going to be the number one option for them. And so I think it's going to do really, really well here over the next little while.
It brings up a very interesting question for investors right now, which is, what is the better trade for the rest of this cycle, however long this cycle might be, I think, and you can tell us rough timing, but I'm guessing you're going to say somewhere in the 6 months to 18 months is how much longer we have in this cycle. What's the better trade? Is the better trade a crypto stock like a Coinbase or a Robinhood, if you would consider Robinhood a crypto stock because of how much crypto activity it does? Or is it a major altcoin like an Ethereum or a Solana? I just asked you this question on stage, but I want to ask it again because I think it's a very interesting question right now.
I think where you need to be paying attention to right now is revenues. Who is actually driving revenues in crypto, which there's not a lot of companies doing it, okay? Not a lot of like protocols that are doing it, but who's bringing revenues and who's using that to buy back their tokens or their equity, right? Coinbase is actually doing that. They have a ton of revenue. Obviously, I think they had close to $2 billion in last quarter, and they're using that to buy back their shares of their company, which is fantastic, or to buy other companies. And so it's very obvious what's going on there. They're generating a ton of revenues. That's growing over time, and so I think that's huge. So I think there is, again, as institutional capital comes in, they're going to look for revenues. And so, again, that's why I'm so bullish Coinbase, actually also very bullish Robinhood. But I think on the liquid token side as well, yes, I know there's meme coins that have been going crazy, and there's a lot of things that are going on there. But I think, again, as institutions do come down that risk curve and they want to come into liquid tokens, they're going to be looking for which things generate revenue. And honestly, there's not a lot in the space. The other thing to think about is there's a lot of companies in crypto that their tokens are being used as incentives, they're being used for airdrops, they're being used for grants, and so that's a lot of sell pressure. And so you got to remember that tokens don't work the same as equity does, right? It's very different than investing in a stock where, you know, you actually have ownership of the company. Tokens, you basically, for a lot of them, you have nothing. You might have some governance, but like ultimately, does that really matter for value? Not so much. And so you got to really be careful. There's even companies out there that do have revenues, but they're not doing anything, like Uniswap, for example. And I'm a big fan of Uniswap, don't get me wrong. I just want to throw them out is, look, they're a great company. They've been, you know, one of the longest standing in the space. They have tons of users, tons of volumes, et cetera. But their token is essentially useless today. Now, one day it could have something, but it doesn't currently. And actually, the value that Uniswap creates goes to Uniswap Labs, to the equity, right? To the private equity, not to the token itself. So I think, I assume institutions will start to understand that and learn that. And what you want to look for, and a lot of this right now is in DeFi because it's just been around the longest, is these guys are generating real revenue. They have real products, product market fit, real users, and they're generating, you know, tens of millions to hundreds of millions a year. And they're using that, some of them today, to buy back their own tokens. And I think that is very, very powerful. If you look at an example for one is Sky, right? It used to be called MakerDAO. They turned on their buyback program, I think it was in February, and it's been up and up and up. They didn't have any pullback during this whole tariff craziness because it didn't matter that there weren't humans buying it. This protocol was just buying it on automation. It didn't matter, right? And so we saw it really do well. Aave has also done quite well because it's another one of those tokens that's buying back, or companies that's buying back its own tokens. And so, look, we haven't had a lot of companies that have done this because of the SEC. They haven't really allowed it. But that's changing. That's changing pretty quickly here. And so I think we're going to start to see a lot of protocols change what they're doing and start to buy back. And I think that's an exciting time. So I want to be looking at who has revenues today, who can potentially have revenues based on where things are going in the space, and then who is buying back their token or who potentially could be buying back their own token. It's kind of like a boost, a cheat code, if you will. And again, there's not a lot of them in crypto. So as institutions come in and they want to allocate capital, that's what they're going to be looking for. And so if you can find those today, I think those are still fairly undervalued. Although they've had a good run over the last few weeks, I would say they're still overvalued versus a lot of the rest of the market.
And you're right. You're probably talking about 10 to 20 protocols, right? Like if that.
If that.
It's not, and you're really you're talking DeFi mostly, right?
For now, yeah.
For now, and you're really talking Solana DeFi and Ethereum DeFi, and then we'll put stable coins. I think would fit into within DeFi, which is you bring up Sky.
Yeah.
Obviously, we're very bullish on stable coins. A ton happening there.
Hold on, I want to talk about the L1s for a second because you asked, your question was really about Ethereum and Solana. Look, I think all these are going to do well. Obviously, more activity is about to come on chain than ever before because you've got Coinbase and Kraken and all these companies building. You got Robinhood starting to bring, and looks like they're going to launch maybe their own chain. It sounds like they might be launching with Arbitrum or maybe Solana, and they're going to bring tokenized stocks on chain, right? A lot of the traditional assets are all moving on chain. I think that's going to be the next big thing over the next year or two, is bringing stocks and equities on chain, bringing private credit, bringing dollars on chain, obviously with stable coins. And so that's going to create a lot more activity. And so I think, of course, that means good things for things like Ethereum and Solana. But one thing to understand, the big trend that I'm seeing right now is that apps are beginning to launch their own chains, right? And I think that's the trend we're going to see. And even apps like Coinbase, what did they do? They didn't just go and build on Ethereum, they launched their own chain on Ethereum. And Robinhood is about to do the same thing. Kraken is doing the same thing. Uniswap, the most used app in all of crypto, what did they do? They launched Unichain, right? Athena, one of the most used stablecoin providers in crypto, they're launching Athena Chain. And so I think this is the trend moving forward, is companies, apps, they're all going to be launching their own chains like they used to launch their own smart contracts. And I don't know yet what that means for the L1s, but I think the L1s have had their moment for the last, 6, 7, 8 years. And there's so many of them now and so many new ones that have came on the market over the last year. That trade worries me now. And I think what you want to find is apps who generate revenue, buy back their own tokens, and own their own block space. Because if you own your own block space, it's another revenue stream for these apps, right? And so ultimately that's net accretive to Ethereum, because many of them are launching as L2s, but it's a smaller amount. And so I think, again, Ethereum, Solana will do well long term. They'll probably do well because I think we'll have another hype cycle like we always do, right? Anytime prices go up, you get retail that comes in and they buy everyone's bags at all-time highs. And so everything will do well. Not everything, but things that have good activity and good adoption. The L1 trade, I think, is very different this time around than it was back in 2021 and in even 2017 when we had that big bull market too.
Let's talk a little bit about are we going to have an altcoin season? And let me preface this by saying the term altcoin is a terrible term.
Yeah.
You're literally trying to basket everything but Bitcoin, which is at this point, I don't know, 10 million, 20 million, 30 million tokens with all the meme coin. I don't even know how many anymore, right? So are we going to, maybe you could enter us into this by talking about Bitcoin dominance. And do you expect Bitcoin dominance to drop? Do you think that Bitcoin dominance has peaked? And then let's talk about, are we going to see an altcoin season? And is it going to be like in the past where everything goes up? Or is it more going to be just the certain sectors within crypto and we need to think differently than we have in past altcoin seasons?
So I've got Bitcoin dominance wrong the last 2 years, so I have no idea if it's top, to be honest. It's currently sitting, I think, around, depending on which metric you look at, but around 65%. For those that don't know, Bitcoin dominance is just taking Bitcoin's market cap, comparing it to everything else in the space, right? And so typically what happens is kind of usually about 3/4 through the bull market, Bitcoin dominance tops. It doesn't mean that Bitcoin doesn't go up anymore. It still does, but you have ETH and all the others that start to outperform. And so Bitcoin's still going up, but its dominance, or its like ratio versus the rest of the market cap, starts to go down. And I think it's gone down usually around to about 40 or maybe a little bit below. I think at some point that happens. Generally that happens when the business cycle picks up and sustains above 50, which I talked about earlier on the macro side of things. The reason for that, this also happens in kind of TradFi markets, is the Meg 7 or like the bigger companies lead us in bull markets in the beginning stages. And then as liquidity picks up, generally rates also tend to go down, but not always. They didn't in 2017. But generally as financial conditions, let's call it, loosen, and that can happen in many different ways, people get a little bit more risky and they go down the risk curve. And so that's when you start to see the smaller stocks, the riskier stocks do well. Same with crypto, right? There's that like last bit of a bull market where the tail end, the riskiest stuff starts to do really, really well. That was the 2021 that we saw last cycle when NFTs were crazy, the most risky of them all. And the small little tokens started to do really, really well. We saw the same thing happen in 2017, right? And so the question everyone's looking for and waiting for is, will that happen again? We've had these like moments of altcoin season over the last 2 years, and each time, interestingly, if you look at the ISM, it's gone above 50, and when that goes above 50, we've had these like crazy moments, but then the ISM's peaked back down, right? So we've had these kind of fake outs, and so I'm assuming in the next, let's say, 2 to 3 months that ISM is going to pick back up and sort of like economic activity is going to pick back up again. If you think about what that means, economic activity picking up, that's people buying things, people consuming all around the world again, right? And when people consume, businesses do well. So what do? They hire a lot of people. Unemployment goes lower, not higher, right? Companies take out loans, they start acquiring, they start to fund research and development. And so like, it's a really good time to be alive, you could say, during those moments, right? But it also means, because everyone has jobs, companies are doing a lot, people have extra capital. And so they want to go and allocate it down that risk curve. And so I think we'll get that at some point, probably the second half of this year. Maybe it's already started today, I don't know. Like we've obviously had a lot of moves from altcoins. So I don't know exactly when that starts, but I think we'll have it. Will everything go up like we had in 2021? I don't think so. The reason is last cycle and in 2017 as well, it was, you could close your eyes and just like look at CoinGecko and pick any token you wanted, throw 10 darts, all of them will do well. All of them outperform, you know, the NASDAQ and the S&P 500. It was ridiculous, right? Now, obviously that doesn't happen over a long period of time, but you had a 6-month window or whatever where you could do that and you could make multiples. It was crazy. I don't know that we'll have that again. We'll definitely have certain assets that will do really well and they'll go up multiples and it'll be crazy. But we now have millions of tokens, right? Millions of them. Now, most of them are just meme coins. They're not even a project tied to it. So like certain of those will do well. Meme coins, I don't think those have gone away. And we've already seen it. If you look on the metrics, those have come back like crazy. Pumped Up Fund is generating a ton again. And so like, we'll see that do well. I think Fartcoin is back above $1 billion. And so like the degens will always degen. That casino thing, that's not going away. And if anything, we're only getting more and more of that.
Well, plus we haven't had retail come in yet, really, in this cycle.
I mean, we did in December.
A little bit,
right? November, December. We did maybe early 2024 as well when the ETFs came in. But again, it was just these like short bursts because then all of a sudden we had the end carry trade unwind in 2024, so everyone left. And then this one, we had the tariff thing, so everyone left again. So like now we're gonna have to wait until probably Bitcoin gets above all-time highs again. That's when all of a sudden headlines come out, media starts talking about it, and you get retail come back again. And that's when we go into this sort of more altcoin season craziness. But again, I think revenue generating apps will do well because even if retail, it takes them a while to come back, institutional capital is coming in today. There's no doubt in my mind. And so I think things like Coinbase, things like Sky are probably gonna do well regardless. And then I think, you know, you'll have your random meme coins and things, some that will do well. Many of them will do absolutely nothing. And so you got to be careful over there. But if you find good apps, good revenue generating things that are actually producing, you know, fundamentally strong things, I think those are going to do well this cycle. Because both they'll get a bid from institutions and probably from retail as well.
Mm-hmm.
So
one thing that we talk a lot about at Milk Road is not round tripping a cycle. We've had that a lot in past cycles where people have come into crypto, they've had these, you know, big goals and big dreams. I'm gonna get rich, right? This is my path to making generational wealth. And they do make quite a bit on paper, but then they don't sell. Yeah. And they round trip and it comes back around. As we go into what
we've all done it, by the way.
Yeah,
we've all done it.
Guilty. As we go into this next part of the cycle, which I think what I'm hearing from you, and I feel the same way, and I know a lot of the guests that I have on the show feel the same way, is we are likely going to see Q3, Q4, we could see financial conditions ease, business cycle picks up, and things look good. We go into that bullish period. How do you manage that as an investor? What are the tips and tricks you have in order to make sure that you don't round trip it, in order to make sure that you don't make the mistakes that are common for a lot of crypto investors?
Yeah, I mean, first, it's going to happen to everyone, especially if you're new. If it's your first cycle, it's almost a guarantee.
But it's just going to happen.
It's almost a guarantee you're going to happen. You kind of have to go through that. One thing I would say is it's not even that bad to round trip. Like if you have been holding Bitcoin since last cycle, as long as you don't sell it during the bear market, then like, you know, you did all right. You've actually done completely fine, right? And so like, I don't think it's the worst thing, again, if you're in the majors, if you're in something like Bitcoin. If you're in anything else, you're basically, you know, you're getting wrecked. And so again, hold a lot of your assets in the majors. And maybe ETH and Solana will become a major, like a real major
What
this
are
time.
the majors when you say the majors?
I mean, for now, Bitcoin is the thing. And even Bitcoin goes down a lot. Like it went down 70% at the end of the last bull market. But again, it came back pretty strong, and you know we're at 100 and whatever we're at today, right? So even if you bought the top back in 2021 and you did round trip it, I mean, you're fine. You're up almost double. So it's really not that big of a deal. Now, not the same story for all the alts, right? Most of these alts, they're not producing any value. There's nothing really there. You were just exit liquidity. And so really what you need to focus on is getting out of those if you are going down the risk curve. You've got to get out of those. Bitcoin, you can hold it long term. That's actually fine. Now, what do you do here? One thing to understand is that in these markets, this happens all of the time. Think about what happened in December and November when Trump won. That wasn't even like some crazy like 2021 level bull market, but it was still craziness. And think about how euphoric everyone gets. You've got to figure out how to manage sentiment, right? Fear and greed is the biggest thing in markets, and you've got to learn how to control your emotions. And so in those moments in December, the reason we actually said we were bearish or getting bearish was not actually fully because of financial conditions. Before we noticed financial conditions was tightening, we were just like, people are too euphoric. This doesn't make any sense. And so that's generally the time where you want to go against consensus, right? I talked about it earlier where earlier in April, everyone was bearish. Everyone was saying that the world was ending. That's your time to buy. Today, it's half and half. You don't need to buy, you don't need to sell, you can chill. But in a few months from now, or however long it takes, when we get back to that point, when everyone is excited about crypto, even your mom, that is the time that you sell. Or at least you start to take profits. Again, I never get out of crypto fully. I feel naked if I do that, right? Like I don't want to do that. But anytime anyone's super excited about anything, this is not even just crypto, that's the time where you want to start to take something off the table. The other thing you have to do is just pay attention to the data, but not the data of crypto, okay? Don't look at new active users, don't look at volumes, things like that. That's only going to go up during a bull market, and it even continues to go up when the bear market comes in, right? Because most people don't realize that we're going into a bear market. This brings you back to the beginning of our conversation. It's all about the macro. It's all about financial conditions, the business cycle. When that stuff starts to top, and not when it's already topped and it's already gone down, when it looks like it's starting to slow down, right? That's when you want to start to, again, begin to get out of the markets. And during that time, when that happens, that's when everyone will be the most bullish. So it actually is
the hardest time to do it.
It is the hardest time, right? It's like trying to, we told our audience to buy on April, I think it was 8th. We bought a bunch of Robinhood, a bunch of Coinbase, and a few other things. And we said, guys, I know this is like the hardest thing to do right now, but this is the best opportunity you get. We've seen this happen over many years of being in this space. The hardest times to buy, like my biggest opportunity was when I bought back when the COVID crash. We went down 50% in one day. And I was like, what just happened? Literally, it felt like the world was ending. And I was like, I think this is the time for me to buy. And I just I loaded up and it was the best decision I ever made. And again, in April so far, like who knows, maybe things change quick. But generally that is the best time. But on the other side, it's very, very hard because everyone's asking about crypto. Everyone's so excited. And everyone's talking about how much money they're making. The moment you hear that stuff, just take something off the table no matter what. And also understand you're not going to get the exact top, and your goal isn't to get the exact top. What I like to do is, as I see that people are getting super bullish and I start to feel that euphoric part, if you get in a cab and your cab driver asks you about whatever token, immediately you just start selling month over month. You just dollar cost average out. Again, you won't hit the perfect top. You'll start selling as prices go down, and that's completely fine, right? The key is you just don't want to hold 100% as we go into another bear market. Now, one other thing I would say is I don't think we get as bad of a bear market as we've had in the past. I think at least in the majors, things like Bitcoin, like ETH, some of the equities, et cetera. And the reason I say that is, I mean, Coinbase now is in the S&P 500. So like it's got kind of its floor is sort of rising as we go here. And Bitcoin has ETFs that are now in, pension funds, et cetera. And so they always have this kind of constant buying. And so will Bitcoin go down 70% this time? No, but will it go down 50 or 40? Like maybe. I mean, like you saw Amazon go down 50% in 2022, right? And a lot of the Make 7 actually did. So like, I don't think we're out of this crazy volatility. It's just kind of the world we live in today. So understand that, but I don't think it's going to be as bad as previous cycles. Now, if you're in meme coins and you're in these like high risk stuff that don't generate revenue and don't buy back your own tokens, expect 99%, like a down going 99%. Right?
Which is where if you are going down the risk curve, you have to very consciously decide how much time you are going to allocate to these investments, because as you go down the risk curve, if you do not keep your eye on the pulse and pay attention, the risk is too great. And I think that's where a lot of people make mistakes as investors.
And the thing that most investors make mistakes on is just managing risk, right? So it's okay to go down the risk curve and buy virtuals or buy, whatever, these things that don't actually have anything fundamental to it, or fart coin or whatever. Just make sure it's a very small percent. We've made mistakes in our portfolio. We're not perfect. We get a lot of assets that we invest in and we tell our audience to invest in or our members to invest in. We get them wrong. But if they're very risky, we put 1%, 2%. But what I always hear from our members anyway is like, we say, hey, we think this one could catch a bid. Here's why. We're allocating 1%. They go and they put 25% of their entire net worth into this thing. And I'm like, dude, that's insane. This is like a $100 million asset. Like, the thing could literally go to zero tomorrow and you're putting 25% of your net worth in. And it's funny, there's just a lot of, not even just retail. Honestly, I talk to TradFi people all the time and they do the same thing, right? It is the reason why crypto blew up in 2022, because TradFi people, not retail, literally got too excited, too euphoric in that moment, as I was talking about, and they were overexposed to stupid things like Terra Luna, right? And so it's not just retail who does this, it's actual finance people where it's their jobs to do this stuff. They still make those mistakes. And again, that happens during these euphoric times.
Play out the rest of this cycle for us. I've brought up timing a few times. Actually, before I forget, I want to mention that none of this is financial advice. I need to do that disclaimer because we've been saying buy and sell quite a bit throughout this.
I'm just saying what I do. I'm not saying what anyone should do.
Entertainment, everybody, not financial advice. Investing is risky. Do your own research, blah, 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 all of that. Disclaimer. The rest of this cycle, what I'm hearing from you is short term, a little bit unclear. We're still on, maybe we're not on solid footing yet, right? No. Could see a pump, maybe could see another dip or another drawback. Unsure right now.
I mean, like short term on the daily, whoever knows, especially with Trump, although Trump has been tweeting to buy right now, so generally that means
stocks are going
it's
up.
A good time to buy, right? I don't know, you just listen to him. It's the best indicator you can get at the moment. Look, I think financial conditions eased a lot, right? And so generally we lag that by about 3 months. And so there's still a few more months left of that. So I actually think we're in a good position until, let's say, midsummer. Then I don't know what's going to happen from there. We'll have to kind of see what happens again with these tariff deals, the trade deals, what happens with economic activity, what happens with liquidity, what happens with the Fed. The Fed right now is not playing ball, but they don't necessarily have to. Again, 2017, the Fed was raising rates and we had one of the craziest bull markets we've ever seen. And so, I don't think they need to participate fully, but things do need to change there a little bit, right? And we also can see what's China going to do. Are they going to keep printing a bunch of money, which so far it looks like they are. So we'll have to kind of see and play it by ear right now. In a few months from now, we'll be able to look and see what's going on in the macro. My guess is the US or Trump and the administration, they have their midterms coming up, right, next year. Generally, what they want is a good market structure during that time, right? At least up until then or close to. And so I got a feeling that what happened here is, if you asked me a year or 2 years ago, I was saying that probably sometime in the second half of 2025, we sort of go into a bit of a bear market, liquidity stops. But what's crazy is the last few months, we kind of put everything on pause. Now, whether that was on purpose or not, I don't know. There's a lot of these like conspiracy theories of they were trying to do that. They're trying to force rates down. They're trying to extend the cycle to midterms. Like, I have no idea. Whatever they did, it did end up doing all that, right? Like, as I said, the ISM should be above 50 today, and it's not. So the business cycle has been put on pause for the last 4 months. So does that mean we have a short cycle? I don't think so, mainly because financial conditions have loosened. Does that mean we have a longer one? More likely. So maybe we move into 2026, Q1, Q2, I don't know. Again, this is one of those things where we don't really know what Trump and that administration is going to do yet. They're doing things very differently than we've seen in the past. So we kind of, it's hard to make predictions right now. And so we kind of just got to play it by ear and see, look at the data, right? But I imagine probably somewhere in the second half or in the first half of 2026 is where we go into more of a bear market vibe. But will that be a year-long one like we had in 2022? Probably not. But again, I don't know. We'll have to see what happens with inflation. Right now, inflation seems to be under control, so it's not so much of a concern. That was the big problem in 2022. We had to raise rates like crazy because inflation was at 8% or something like that.
And how are you? And how much in loans have you given out so far? Where do you see the trajectory for this?
Yeah, we've had phenomenal demand since we started deploying in Canada. We've millions deployed to date. We are also very excited to have signed a facility, a $20 million facility that allows us to actually deploy loans with a fund that's been a great partner to us. And so we have the facility in place, the capital to deploy the loans, we have the license, we have phenomenal technology, and it's just a perfect storm at this point in time. And there is a lot of demand, I can tell you, in Canada for a compliant, safe, and secure platform.
What's the potential for this market?
Yeah, I mean, look, I think at this point in time, we're looking at, I think there was a report that came out by A16Z last year that said 90% of crypto is being held in wallets that are not being actively traded. So that's just crypto that's just sitting there. And you know, if our theory is that if we were to you know, bring a compliant global leading lending business to these users, there's a lot of capital that's waiting to be unlocked and a lot of liquidity. And so, you know, the industry is projected to grow to 45 billion by 2030, the Bitcoin-backed lending industry specifically. And so, you know, in Canada, we're looking at around $1 billion in terms of the size of the industry over the next 5 years. So there's a lot of room to grow, and we're very, very excited.
Okay, very fascinating. And how are you finding the climate in Canada for crypto right now? We've been talking to folks all day, and you know, we've heard from entrepreneurs saying it has been difficult with the regulatory clarity and such, and with the election of Mark Carney, where do you see it all headed?
That's a nice question. I mean, look, I think with the current government, we don't expect in Canada, we don't expect any, we expect things to just continue as they are, kind of status quo. I think potentially a different government would have been more conducive to you know, more positive change. I think at this point in time, we're just expecting things to stay as they are. We'll continue working with our regulators and advancing things, and you know, pushing the industry forward. And so I think Canada has a great regulatory brand worldwide. I think we're in the top 10 countries as it pertains to financial markets and the regulators and the stability of our markets. So there's a lot of potential in Canada, even though it is a smaller market, but our regulators are very forward-thinking if you come to them with the right idea and the right risk mitigation factors in place, right? That being said, I think what's happening south of the border right now is very, very positive for this industry as a whole. So undoubtedly, things are going to be moving faster in Canada, just taking into account how fast things are moving down south, which is great for us as well. So I'm looking forward to, very optimistic with, you know, the future of crypto lending and crypto in Canada.
And I guess my last question before we wrap is there any vetting involved with the people that you loan money out to?
Is there any vetting?
Yeah.
Well, I mean, absolutely. So our platform is fully compliant with FinTrack, KYC rules in Canada and FinCEN rules in the US, fully compliant with CSA client suitability and onboarding. So when you borrow from Apex Lending, you know you're borrowing from a regulated and you know, authorized lender, and so there's full regulatory compliance involved. And of course, you know, we don't lend to individuals that are on sanctions lists and things of that nature.
And is APX making, in terms of your business model, making money off of holding, custodying this collateral?
No, so we make money by charging our clients an interest rate on the loans that we deploy to them, and we source that interest for a lower rate from our institutional lenders. Okay. So it's a very straightforward model. There's no origination fees, there's no hidden fees. It's a very straight and simple model. You pay for what you borrow, and hopefully have an amazing service.
Well, Andre, thank you so much, and very good luck to you in this new business.
Thanks for having me.
All right, that was APX Lending CEO Andre Polyakov. More after a quick break. Our next guest is a leading authority on the digital age, penning 16 books, including the bestseller Blockchain Revolution. His new book, U to the Power of 2, Redefining Human Potential in the Age of Identic AI, will be released this fall. But we're getting a world premiere early preview right here at Consensus, so please welcome Blockchain Research Institute CEO Don Tapscott. Don, thanks so much for joining us. You know, I've got to credit you and your book, Blockchain Revolution, for really helping me have that aha moment on why Bitcoin, cryptocurrencies are the digital transformation of our financial system. So thank you.
You know, I wish I had $100 for everybody who's told me that. It's been almost a decade.
Yeah, you were early on.
And sometimes you get lucky with a book.
And now you're on to artificial intelligence, so already onto the next trend. And you're arguing that personal agents or identic AI will be very key to the next wave of technology. So tell folks, what is identic AI? What are these personal agents?
Well, the new book, as you mentioned, U to the Power of 2, is about redefining human potential. And identic AI, by the way, my co-author is Joseph Bradley, who's the CEO of Autonomous. And Christine, there are all kinds of agents. There are agents in call centers, financial systems, supply chains. And this so-called agentic AI is the future of AI. But the one that really matters and will have the biggest impact is digital Christine. No, it's
my digital clone.
Yeah, well, it's more than a clone because it's infinitely more capable than you.
Oh,
and it will enhance your capability dramatically.
Yes.
So it'll be your personal doctor. Very capable because it's gone to every medical school in the world, read every text, and knows about every procedure that's ever been performed. It'll be your personal tutor. It's literally a know-it-all because it knows everything. It is all-knowing, all recorded knowledge, and it will help you manage that. It's your vice president. Actually, it is an infinite number of vice presidents. One's out negotiating problems with customers. The other is addressing a big opportunity in a new market. Another is attending a dozen conferences that you can't go to figure out which one would have been the good one. Another one's helping you manage your personal life. So there are a dozen different parts of our lives, all to which our digital identities are not just made of data, but they're becoming brilliant and smart. And if we do this right, this will expand human capability infinitely. If we do it wrong, it'll lead to the extinction of civilization.
Oh my.